So guys, we are live. We are live. Can you all see me? Can you all hear me? Just a second. Can you confirm me audio and video? Yes, sir. Yes, sir. You are beautifully visible and soundfully audible. Yes, sir. We can see you. We can see you. We can see you. Perfect. 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 Okay, Ji. So, hello everybody and welcome to the CA Final Direct Access and International Taxation live power batch that too in full English. A very warm good morning to all of you present here. Hope you all are doing really, really well. So, what we studied yesterday, we studied actually not yesterday, but till yesterday we completed off with the concepts of entire capital gain. We were due to complete question answers yesterday only, but because we have certain time limitations towards the end of the day, so we kept them for today. Let's do question answer today. Let's do a small warm up of the question answer. We have question number 4 from Super 150. Now, where these questions Super 150 are, see these Super 150 important questions I have shared with you on Telegram group, private Telegram group. So, aren't these questions in public? As of now, these questions are not in public because these questions I want to give to the normal students as well. But issue is these questions do not incorporate the November 26 RTP. So why they don't incorporate? Because November 26 RTP is not out yet. So for internal circulation, I have given this in my personal group. In our batch specific group, I have shared. Once RTP are out, I will share RTP to you as well. We shall solve those RTP and I will add those questions in the Super 150 PDF and share this to everybody. Okay? So this is for our internal reference as of now. Once we are done with the patch or once RTP is out, then I will share entire fresh Super 150, which will include RTP as well. It will not change any question. Questions shall remain same. But it's just that if I want to give question bank to normal students or student as a whole, it should also incorporate RTP as well. I don't want to give multiple PDFs to normal students, but class students can have multiple resources as well. So that is why this PDF has been shared in our Telegram group. Okay? If somebody who has not received it can always download from there. Come on to question number 4. Gamma Limited. We have with us Kavya, Bhuvana, Krish, Kamal, Gokul, Lokesh, Arun Shriram, and many other people watching silently, not revealing their names. Let's try to solve this question. This is a very classic question of exemption, and it will of course require a lot of your brain. This will also require some of your tax planning as well. Listen, try participating this. Gamma Limited, located within the Corporation Limited, decided in April 2025 to shift its industrial undertaking to non-urban areas. Gamma is in city. It is an urban area. Wanted to shift to non-urban areas. Can you recollect a section which talks about this thing? Somebody shifting from urban area to rural area. Urban area to rural area. Can you recollect a section? Sir, in exemptions now we had a section called section 54G, which exclusively stated that if you shift from urban to rural, then whatever your capital gain on building and plant and machinery was, we would exempt that. Be it short term, be it long term, we would exempt that. Yes. So there was section. Some company sold some of the old assets and acquired the new asset in the process of shifting. The relevant details are as follows. Okay, fair enough. Sale proceeds have been given land, building, plant and machinery, furniture. Sales proceeds have been given. Fair enough. Index cost of acquisition, sir. Index cost of acquisition. Index cost of acquisition is no use as of now. Indexation is not even done. But why this index cost of acquisition is given? We have to assume that this is a long-term capital asset. That is why indexation has been given. So for land, we would use that. And whatever our answer would be, that is 4 lakh, that will be long-term capital gain. This would be long-term capital gain. In building, we would never use index cost of acquisition. In furniture, we would never use index cost of acquisition. This index word only indicates that this land is a long-term capital asset. Fair enough. Now we have been given WTV. See, building, furniture, and plant and machinery, these all are depreciable assets. We are clearly aware. Building, furniture, and plant and machinery are depreciable assets. In these assets, cost of acquisition is nothing but WTV. So we shall reduce the WTV. And this will give us the capital gain. 14 lakh capital gain, 11 lakh capital gain, 1 lakh capital gain, and all these three will be short-term capital gain. Any depreciable asset would yield you short-term capital gain. Fair enough. Cost of new asset acquired in July 2025 for the purpose of new space. Sir, on furniture, we will never get any exemption. We have studied this. Building and plant and machinery, we have acquired for 14 lakh, sorry, for 24 lakh overall. So 1 lakh we will have short-term capital gain. And land we have acquired for 4 lakhs, so we'll have 0 as long-term capital gain. So our final answer would be 2 lakh of short-term capital gain. Did you understand how to do these type of questions? Did you understand how to do these type of questions? Did you understand? Just confirm. How to do these type of questions? Did you understand? Yes, sir. Yes, sir. How full value of consideration is taken, how cost of acquisition is reduced. Sir, this is not a correct answer. This is not a correct answer. This is incorrect answer. Now wake up and welcome to CA final. This is not correct. Any intermediate student would do this answer. A CA final student would never do this answer. Why? Why did I say that? See, furniture 1 lakh short-term capital gain is to be for sure paid. Is to be for sure paid. For sure paid. But think of this like this. Think of the upcoming thing like this. Section 54G says you have to buy land or building plant and machinery by selling land or building plant and machinery. Does Section 54G says that you have to buy land for land and plant and machinery for plant and machinery? No, sir. Section 54G says land or building plant and machinery you have to sell, and you have to buy land or building plant and machinery. That means against land, can I buy plant and machinery? Against land, can I buy plant and machinery? Or against plant and machinery, can I buy land? Sir, I can, of course, buy. Of course, buy. Of course, we can buy. In this process, sir, instead of claiming this as 4 lakh, we will do 3 lakh here. Instead of taking exemption under long-term capital gain, we would take exemption under short-term capital gain. So our short-term capital gain would become 0 and long-term capital gain would be there. That is why our final answer would turn out to be 1 lakh of short-term capital gain, which will be taxed at slab, and 1 lakh of long-term capital gain taxed at 12.5%. Willingly, unwillingly, you are able to now save 12.5% of taxes. This slab rate, which was earlier taxable, 1 lakh, which was taxed at slab, now you converted that into long-term capital gain. This is tax planning. This is tax planning, and that is what is expected in this question. Okay. This is not just a simple question just to teach you how to calculate taxes. It is a concept builder where you can think how to think the answer. Okay. Woke up now? Now, yesterday or day before yesterday, on day number 3, I had asked you to solve this question number 5. Question number 5 as practice. Did you try this question? Did you try this question? Sir, these all are questions now which are going to brainstorm you. These are not simple questions. These are questions which are going to brainstorm you. Did you try this question? What Deepak says, sir, ebooks is still not available in the fast application. Can you please check with the team? Yes, I'll get that checked. I'll get that checked. Okay. The following are the income details provided by Mr. Singh for financial year ending 31st March 2026. Following are the information available. Rental received from property in Bangalore 3 lakh. Standard rent 2.5 lakh. Fair rent 2.8 lakh. Sir, we are studying CA final. You did not teach us house property. What is this? Standard rent, fair rent. What is this? What is this? How we are going to deal with this? So standard rent, fair rent. We have not studied this. What if such thing come in exam which you have not dealt with? What if these type of things come in exam which you have not dealt with? How you are going to deal? So the most important thing required is logic. Most important thing. See, of course, there is a format as to how do we solve these rental problems or house property problems. But the basic thing required is the common sense. How common sense? For example, if I have a property's value is 1 lakh rupees and I am able to sell it for 5 lakh rupees. Sir, if sales price is higher, there are no chances that FMV will be ever considered. FMV will have no value if sales is being done at a higher price. So if money received is higher now, of course money received is to be taken for taxes purpose. Every other information is useless. Are you getting? The standard rent, fair rent. Sir, if these are lower but actual rent is higher, so we shall always take the actual rent. Logic is this only na. If you have been given that gold ring that you have is worth 2 lakh rupees, but you are able to sell it at 3.5 lakh rupees, so government will always be taking tax on 3.5 lakh now. If actual money received is higher, so you will be always taxed on actual money now. Notional money, these are notional rents. These are just notional rents. Standard rent, fair rent, municipal rent. These are just notional. But if actual is higher, you shall always be taking actual. So if you don't know the concept, by default, you might take actual rent as your rent received. That is perfect answer. That will be absolutely correct. But that is not how we do. The format is, sir, we have municipal rent or fair rent. Whichever is higher, we shall be taking subject to maximum of standard rent, whichever is lower. And this is called expected rent. This expected rent has to be compared with actual rent. And whatever comes will be your gross annual value. In this gross annual value, you shall take deduction of municipal taxes paid for the year. And this will give you net annual value. On this net annual value, you get 30% standard deduction. And you get interest on loan. And this will give you income from house property. Okay? This is the format through which the answers are done. How do we proceed with this question? See, actual rent is 3 lakh only, so I am proceeding with the 3 lakh. Municipal taxes and water taxes paid during the year 35,000 and 1,50,000. See, for municipal taxes, we have a basic knowledge required from CA intermediate level that municipal taxes is allowed in the year in which actual payment is done. In any year you might have accrued them, it's not relevant. The year in which you pay, you get deduction in that year. So here deduction would be given in current year. So deduction would be allowed minus 35,000 minus 1.5 lakh. That means our net annual value would be 1.15 lakh. On this, we are given two deductions. Deduction 30%. How much would be the 30% deduction? 0.345. Minus, we shall be reducing one more thing, that is interest on loan taken. Interest on loan borrowed for major repairs. So we have interest that is 1.5 lakh. Overall, we'll have a loss here. 69,500 is the loss amount. This is the loss amount. This is the amount of loss which is sustained by Mr. Singh under house property head. Sir, arrears of rent 30,000 received during the year which is not charged to tax in earlier years. See, if you have any arrears of rent being received, see, arrears of rent means these were disputed rents. You were subject to receive in previous years, but you received today. So this will be taxed. This will be taxed today. But whenever you receive arrears of rent now, this is being taxed at the rate of 70% only. Okay, because 30% you get standard deduction. So 30,000 into 70% would be 21,000 would be arrears. So your income from house property would finally turn out to be 48,500 rupees of loss. This will be your loss from house property. This will be your final loss from house property. Sir, enough. Enough. I've got your point. Further, Mr. Singh furnished the following additional information regarding sale of property from Chennai. Sale of property from Chennai, Mr. You got information for Mr. Singh. Okay. Mr. Singh's father acquired a residential house property in 2006 for 1,25,000. This was gifted the same year to Mr. Singh. So father acquired the property and in the same year it was gifted to Mr. Singh. Mr. Singh sold the property on 10th June 2025. Consideration received is 25 lakh. So full value of consideration for Mr. Singh is 25 lakh. And cost of acquisition has been given 1.25 lakh. Fair enough. Stamp duty charges paid by purchaser at the time of registration is 13%. Oh, what this question says. We are selling the property by 25 lakh rupees, but the other person who is buying is getting that registered by paying 13% stamp duty charges equaling to 3,90,000. That means the other person who is buying, he is paying stamp duty charges of 3,90,000 divided by 13% because he has paid 13% charges. That means 30 lakh is the stamp duty value for the other person. 30 lakh is the stamp duty value for the other person. Oh. If SDV is 30 lakh rupees, we shall ignore the full value of consideration. Whenever we have been given full value of consideration and SDV exceeds 110% of consideration, we shall ignore that and we shall take SDV. So our capital gain would turn out to be 30 lakh minus 1,25,000, 28,75,000. On 2nd January 2026, the SSC had purchased two adjacent flats. We have discussed this thing, if you are able to recall. Two adjacent flats in the same building had made the suitable modifications to make them one unit. The investments was made through separate sale deed 8 lakh and 7 lakh. So you bought two different flats of 7 lakh and 8 lakh rupees. You can claim exemption on both of them. There are two reasons. First of all, if you make suitable modification, it is considered as one only. And we have another provision that if your capital gain is up to 2 crore rupees, then you might buy two properties once in a lifetime. So in this case, exemption would be allowed under 54 would be 15 lakh. On 10/10/2025, that means within 6 months, you have bought 10 lakh of NHAI bonds. But these bonds have been allotted later on. Oh my God, sir. 10th June is the transfer date. 10th June is the transfer date. Within 6 months, you have to buy the bonds and you bought the bonds on 10th. Within 4 months, you bought. But allotment is done after 6 months. It is not relevant. Date of allotment is absolutely not relevant. They will be given exemption of this 10 lakh. $3,75,000 will be our capital gain. Long-term capital gain. Compute the taxable income of Mr. for assessment year 26-27, assuming he has exercised the option to shift out of default tax regime. So he pays tax under old tax regime. That is what is given here. Under old tax regime, he has paid the taxes. Okay. So his total income would be, see, under old tax regime, we have a provision. Listen, we have a provision that now losses from house property can be set off against the other incomes. Under old regime, we can set off, but under new tax regime, we cannot set off losses. So if this would have been 115 BAC, we might not be able to set off the losses. But right now, we can set off. So this losses can be set off against this income. So our final total income would be 3,65,000. This would be his total income. This would be his total income. Gotcha. Gotcha. So this would be final total income. Anybody having any doubt? We have Deepak. Sir, under section 45.4. 45.4. Okay. Closing capital. Opening capital will be short-term capital gain if self-generated goodwill or asset means. Lokesh says, yes, sir, clear. Bhuvana says clear. I did not understand your doubt, Deepak. I did not understand what your doubt is. Kavi says clear. Yes, sir. Can I ask one more thing? Can I ask one more thing? What about calculating taxes? How much taxes would be calculated on this? How much taxes would be calculated on this? Assuming old regime. Even though this has not been asked in the question, I am asking you to do it. Can you do it for me? 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 Please, please. I know it's morning. I know it's difficult to sit. I know it's difficult to digest. I know it's difficult to pick up the pen, but yes, somehow you have to do it. Some things are not done by choices. Can you do this? Bhuvana says 9945. Okay. Should I tell you taxes? How do we calculate taxes in this case? Should I tell you how do we calculate taxes in this case? Sir, taxes. Sir, 326,500 into 12.5%. Is it? Is it how we are going to do that? Right answer is no. Taxes are calculated as if no indexation has been given multiplied by 12.5%, and as if indexation has been given multiplied by 20%. That is how we do. Correct? That is how we do. In the given case, sir, don't we have a 2.5 lakh of basic exemption limit? Don't we have a 2.5 lakh of basic exemption limit? So we'll have 76,500 into 12.5%. This is the amount of tax that will be charged if we go for old regime. 9562. Of course, this entire capital gain will be zero because of 87A rebate. It is allowed. So under Even by paying 12.5%, our capital gain would be zero, taxes would be zero. Of course, zero is going to be lower, so our answer would be zero taxes in the given case. Our answer would be zero taxes in the given case. Oh my dear God. Oh my dear God. Oh my dear God. He will be liable for no taxes because up to 2.5 lakh he has basic exemption limit, and whatever remaining capital gain is there, if you consider even 12.5% of that, even 12.5%, if you consider that now, it will be lesser than 12,500. He will get rebate under 87A. Therefore, no taxes would be applicable on the given case. That is why he will not get any, I mean, he will not be liable for any taxes in the given case. In this case, he will not be liable for any taxes. No taxes are required to be paid. Only his total income is given. Otherwise, no taxes will be charged. Got it, sir? Very beautiful question. Next question. Deepak, see, Deepak is having a doubt. Something unrelated. I have to again go back to 45.4, but still, chalo. You have asked. I'm just referring the things. If you remember the example that we took, if you remember the example that we have in our book, just let me refer that to you. See, it's always better to be in the time, in the present time. It's always to be better in the present time. In the given case, we had example in our book where we had capital gain of 23,73,700. This was capital gain under 45.4. Now this has to be apportioned to different assets. This has to be apportioned to different assets. Now the point is, sir, is this long-term capital gain or is this short-term capital gain? Is this long-term capital gain or is this short-term capital gain? Point I'm asking is, sir, if in our case, if you remember the case, Prem was allotted Nagpur land plus cash. He was allotted 45 lakh worth of land plus 15 lakh of cash. So overall his money receipt was 60 lakh rupees, whereas his capital was 36 lakh 36,000 something. So his capital gain under 45.4 was 23 lakh. This was the case, if you remember. See, this is how some students get disturbed in the morning. Now, this is the amount of capital gain under 45.4. Will this be considered as long-term capital gain, and this is will this be considered as short-term capital gain? So this will be considered as long-term capital gain because asset given is long-term only, and overpayment of capital is being done, so it will be long-term capital gain only. But lawmaker says that when you attribute this capital gain to other assets, there would be different attributions. Pune land will have different attributions. Mumbai land will have different attributions. Goodwill will have different attributions. Sir, if you attribute towards goodwill, long term, it cannot be long term capital gain. Why? Because goodwill cannot give you long term capital gain. Now, goodwill is always short term capital asset. It is always a business asset. Goodwill is always considered as business asset, so any capital gain arising would be short term capital gain. Therefore, allocated to goodwill shall always be short term capital gain. But that is not relevant to us now. Point here is, entire concept is that tricky. In this entire concept, we just need to know the attribution. Now, whatever the nature of the capital asset is, based on that nature, capital gain will align. This is what is written here. This is what is written here. For example, if capital gain relates to the asset received by the partner, there will be no attribution. If it does not relate to any asset, no attribution would be done. Any short-term capital gain asset is transferred, then it will be short-term capital gain. If any block of asset is transferred, it will be short-term capital gain. If self-generated goodwill is there, then it will be short-term capital gain. Point here is, the capital gain on this 45.4 has to be dependent upon the asset being given to the partner. And whatever the appropriation will be there, appropriation will align as per the different types of assets. Appropriation will align as per different types of assets. For example, if I have long-term capital gain and this appropriation is to be done on short-term capital assets, so this will become short-term in the given case. This is what the provision is. But this is not important for us to understand because this is deemed provision. Even if I have not taught you this, you might have done this of your own. Got it? Question number 6. Important question. These are not simple questions. Important questions. SSPL, an Indian company having two undertakings engaged in manufacturing of cement and steel, decided to hive off the cement division. So SSPL had two units. First is cement and the other one is steel. Now it decided to hive off the cement unit. So cement unit, whenever is hived off, it is via slump sale only or via demerger. There are two reasons only, two ways through which we can do. Perfect. Hive off to RVPL, an Indian company by the way of demerger. So cement division has been transferred to RVPL via demerger. Oh, demerger, demerger. The net worth of SSPL immediately before the demerger was 40 crore. So SSPL's net worth was 40 crore rupees. The net book value of assets transferred to RVPL was 10 crore. So out of this 40 crore, 10 crore assets transferred to RVPL. So this SSPL is left with 30 crore now. So 10 crore have been transferred to RVPL. The demerger was made in July 2026. Okay, sorry, January 2026. In the scheme of demerger, it was fixed that each equity shares of SSPL will get two equity shares of RVPL. So if somebody held one share of SSPL, he would get two shares of RVPL. Okay. Okay. Mr. NK, who held 25,000 of SSPL, which were acquired in financial year 24-25 for 6 lakh rupees. So Mr. NK was there, a person who had 25,000 shares of SSPL acquired for 6 lakh rupees. Now, since he has 25,000, he would get 50,000 shares of RVPL. He has 25,000 shares of SSPL, which were acquired for 6 lakh rupees. And for every one share, everybody would get two shares. So he will get 50,000 shares of RVPL. Okay. What will be the cost of acquisition of this 50,000 shares? Sir, 10%, sorry, 25% of the assets transferred. Total net assets transferred are 25%. Out of 40 crore, 10 crore have transferred to new unit now. So cost of acquisition would be divided 25%. 25% would become cost of acquisition of the new entity. So out of the 6 lakh, 25,000 would be 25% would be the cost of new shares. That means 1,50,000. NK received 50,000 shares consequent to the demerger in Jan 26, and he sold all the shares for 8 lakh rupees in March 2026. So he sold all the shares for 8 lakh rupees. Now, entire shares of demerged entity, resulting entity, he sold for 8 lakh rupees. Entire shares of the resulting entity he sold for 8 lakh rupees. Fair enough, very fair enough. The resulting entity, whatever is there, resulting entity, the shares are sold for 8 lakh rupees. Its cost of acquisition would be, the original cost of acquisition was 6 lakh and 25% of the assets were transferred to new entity. So 1,50,000 would be the cost of acquisition. Capital gain arising would be 6.5 lakh. This would be capital gain, simple capital gain, long-term capital gain arising. What is being asked? Now, here you have to be very conscious. This is the classic example of how question is being asked and how you will miss out to write the answer. This is the question which can directly be asked in exam. I have not created this, but this is the kind of question that can directly be asked to you in exam. Issue involved here is, if this is a question given in exam, you might overwrite, because this question would come for either 6 marks or either 8 marks. And there are 5 subparts to be answered. 5 subparts. Each subpart might have either 1 mark or 2 marks. So you have to limit yourself. You might be willing to write everything that you know, but you have to limit yourself because you will not get marks for that. Got it? So beneficial, advisable is to just limit yourself to 1 or 2 marks. Now what the question says: does the transaction attract demerger in the hands of SSPL and RVPL? We have two companies, demerged company SSPL and resulting company RVPL. What is the tax liability going to take place between the two entities? See, if it is a valid demerger as per Income Tax Act, then no tax liability would take place. Any transfer of assets shall be absolutely exempt transfer and there would be no tax liability. If you write this much, you will get 1 mark. Those 5 conditions you need not to write because it is 1 mark question. Na? Demerger is an exempt transfer. Oh. Compute the tax capital gain that would arise in the hands of NK on receipts of the shares of the RVPL. See, NK was a person who had 25,000 shares of the demerged company and he got 50,000 free shares of resulting company. What will be the capital gain applicable on receipt of the shares? Arey Baba, in receipt of shares, there is no capital gain happening. Whatever surrender of shares took place, it will absolutely exempt. There will be no capital gain applicable on this. Okay, sir. Okay. Compute the capital gain that would arise in the hands of NK on sale of RVPL. NK had 50,000 shares of RVPL. These shares were sold for 8 lakh. Cost of acquisition we have computed 1.5 lakh. 6.5 lakh would be capital gain. Come to fifth question. Fifth part, is NK eligible to claim any exemption under Income Tax Act on the sale of RVPL? Just think of it like we think. If I have sold the shares of a company, what exemption can I claim? If I have long-term capital gain on sale of shares, what exemption can I claim? Sir, only one exemption is allowed, that is 54F exemption is allowed to us. Therefore, we can claim only 54F, nothing else. Only 54F we can claim and nothing else. Oh, sir, you got us. Sir, that's correct. Last part, which is a bit typical, but yes, yet easy. Will sale of shares by the NK affect the tax benefit available by SSPL or RVPL? Listen very carefully. This is SSPL and this is RVPL. NK had 25,000 shares of SSPL and he has 50,000 shares in RVPL. And he sold them immediately. Within a span of 2 months, he sold them. We have an inherent condition that at least 75% of the shareholders of the demerged company shall become shareholders of the resulting company. At least 75% of the shareholders shall become shareholders in resulting company. At least 75%. This is what the inherent condition is. Is this condition being fulfilled or is this condition being breached? We have not been given this information. How much was the original share capital? How much percentage NK had? How much percentage he became the owner? That is nothing being given. So we shall assume that this condition shall continue to be fulfilled. We shall assume. And based on that assumption only, the answer is given. And that is how your answer would be given. It will not affect the tax liability because it is presumed that it is satisfied. This is the question number 6. Come on to question number 7. Are you awake or sleeping? Awake or sleeping? Awake or sleeping? Mr. Sanjoy, a beautiful question. I had given as DPQ. If you have not done, let's see. Awake, sir. Awake. Mr. Sanjay is a resident Indian, age 55. He has an impressive investment portfolio in various mutual funds. Wow, sir. We have Om Dalsania. Sleeping, sir. Who is this Om Dalsania? Sleeping, sir. Oh, ho. Sleeping. Good night. Have a sweet dream. And in that same sweet dream, DT will come and haunt you. Okay. Now, Mr. Sanjay is a resident, age 55, has an impressive portfolio of mutual fund. He redeemed his entire mutual fund portfolio and bought villa in Lonavala for 2 crore rupees. He spent his rest of the life therein. See, just imagine the life you want. You are investing in SIP, waiting for you to waiting for the SIP to grow. Once those mutual fund grow significant so that you can sell those mutual fund and buy a new house in Lonavala, a hill station, and spend your life there. Beautiful life, such a beautiful life. Wow. So he has 4 different kinds of funds: BLR, ABC, ABD, and SBA. He has 4 different kinds of funds. Fund 1 and 2 have stated that 30% of their proceeds in equity shares of domestic company. So funds 1 and 2 have 30% proceeds in equity, and fund 3 and 4 have invested 70% of their proceeds in equity. So 70% in equity, 70% in equity. The pattern remain unchanged. STT has been paid wherever applicable. You are required to compute the capital gain. Now, my point is, do you recall that if 65% of the proceeds are invested in equity shares, then these are considered as equity oriented mutual fund. These are equity oriented mutual fund. And less than 65 would make them debt oriented mutual fund. So this would be debt oriented mutual fund. This would be debt oriented mutual fund. In addition to that, if you remember a section called 50AA, if mutual funds have been issued after 1st April 2023 and less than 35% of the proceeds are invested in equity shares, then in that case it would be 50AA. It would be 50AA in that case now. Second one, the ABC will be considered as 50AA as well. Oh my God. So our answer would be like this. Not answer actually. Our analysis would be, first one would be debt oriented mutual fund. Second one would be 50AA. Third would be equity oriented. And fourth would be 50 equity oriented. How much our capital gain? How much our would be capital gain? See, this is redeemed amount. That means sales amount. This is invested amount. So this 140 reduced, 140 minus 120, so 20 lakh will be capital gain, 4 lakh will be capital gain, 3 lakh will be capital gain, 10 lakh will be capital gain. So this will be the entire capital gain structure. This will be the entire capital gain structure. So our total capital gain would simply turn out to be 20 plus 4 plus 3 plus 10. So 37 lakh would be the capital gain. Somebody who has done at this up to this point should be rewarded, should be rewarded. This is the capital gain for sure. But sir, we need to know the split also now. Now listen. This is SBA growth oriented fund. SBA growth oriented fund. That is it. It is equity oriented. Equity oriented mutual fund should have been held for 1 year to make it long term. This was acquired in 2023, sold in 2025. That means it is held for at least 1 year. So this will be LTCG 112A. Second mutual fund, ABD Mid Cap Fund. 2nd December 2024 acquired. July 2025 sold. That means held for lesser than 1 year. So it is short term capital gain under 111A. Oh. 50AA will always be other SCCG. And debt oriented mutual fund should have been held for at least 2 years. 2022 acquired, 2025 sold. That means held for 3 years. So it will be long term capital gain under 112. So we have 4 different types of capital gain applicable in 4 different securities. 4 different capital gain in 4 different securities. Wow, sir. Wow. Like, wow. Point here is on what capital gains we can claim exemption. Sir, one exemption is eligible. Of course, we are selling mutual fund and buying property. So 54F would be given to us. That is obvious. That is obvio, bro. If you are selling mutual fund and buying property, immovable property or house, residential house property, 54F exemption would be given to you. So 54 exemption would be F would be given to you. Sir, we got that. On this, only these are 2 capital gains on which exemption would be given to us, because on short-term capital gain, we do not get any exemption. We do not get exemption on short-term capital gain. We will be given exemption on this only. So how exemption is being calculated? If I remember, I have a memory, habit of forgetting things. Okay. So exemption, if I am correct, exemption amount was equal to capital gain, long-term capital gain into cost of new asset divided by net consideration. So long-term capital gain is nothing but 20 lakh plus 10 lakh, that is 30 lakh. Cost of new asset is 2 crore rupees, 200 lakh, and net consideration was 140 and 120, that is 260. So 30 lakh divided by 260 into 200. So 23 lakh would be allowed as exemption. 23.07 lakh would be allowed as exemption, which is absolutely wrong. It is absolutely wrong. Absolutely wrong. This is correct as per a normal new person. But you are a pro, you are a chartered accountant, bro. You are a chartered accountant. You need to have some higher intellect. Just think of it that way. You bought property of 2 crore rupees. You bought property of 2 crore rupees. Now, from where did you earn? From where did you get this 2 crore? It can be either directly from this money or it can be directly from this money. It can be from either of the two now. It can be from either of the two. Now, we have an option to assume wherever our capital gain would be more, we shall assume our capital gain is more. So, why not to exempt that? Why not to exempt that? Sir, it is advisable now. We'll assume that entire 140 is used here. And out of this 120, only 60 lakh is used. Can we do that? Can we assume that, sir? We can assume that. So 20 lakh of capital gain into 140 divided by 140. So entire 20 lakh will be given as exemption. Here 10 lakh of capital gain out of 120, 60 is used. So 5 lakh would be given as exemption. So if you do the total in this manner, you will get 25 lakh of exemption, which is higher. And your taxable capital gain would be 12 lakh only. Your taxable capital gain will be 12 lakh only. Did you understand this point? Did you understand this point? For your reference only, I am telling. Okay, this is a conversation between you and me, nobody else. For your reference only, I am telling. If you would have done a cumulative wise, the way I did earlier, if you would have done that way, 30 lakh into 2 crore upon 3 and 260 crore, if you would have done that now, you might have missed on tax rates. You might never be able to calculate taxes. You might never be able to calculate taxes. Why you will never be able to calculate? Because how you will reduce, which capital gain you will appropriate, what? You will never be able to calculate taxes. With this, you will be able to calculate taxes because you know actually which capital gain is exempt how much. If you do cumulatively, you will never know which capital gain is exempt how much. That is why you will never be able to calculate taxes in that sense. Okay, so taxes calculation would be difficult. That is why it is done. Question number 7. Question number 8, the Prem question that right now I discussed, the Prem question that we have in our concept book, we have already done this question. Robert, only after NR taxation we can do. See, capital gain is not a chapter which is asked in isolation. As in after NR taxation only we can do. SALC we have already done. Shivansh, it includes liquidation and buyback. We might not be able to do it right now. Yes, but today we'll be able to do. Question number 13. Did you try this question? Did you try this question? Where do I do it? Okay. A Limited is an Indian company wholly owned subsidiary of another company, E Limited. E Limited is the parent company and A Limited is wholly owned subsidiary. Beautiful question. You can mark double star to this question. Very beautiful question. Very beautiful. On 10th, 2020. Yeah, that means I can say October 2020. A Limited sold a plot of land to E Limited for 35 lakh rupees. So A sold a plot of land. What's the timeline? Instead of this, what should I do? I should do it at the bottom. So what do we have? A is the wholly owned subsidiary of E Limited now. So A Limited sold a piece of land on October 2020 for 35 lakh. For 35 lakhs. Full value of consideration would be 35 lakh. A Limited sold. Okay. Subsidiary selling the asset to the parent. Do you remember a provision? Coming to your brain? So subsidiary giving any asset to the parent shall be absolutely exempt. But does that mean we don't even have to calculate capital gain? We have to calculate capital gain and then we have to claim the exemption. Okay? It will be exempt transfer only after we are done with calculating the capital gain. Sold a plot of land to 35 lakh rupees. The plot was purchased in 2010 for 15 lakh rupees. So in 2010 it was purchased. So instead of cost of acquisition, we shall take index cost of acquisition. We shall take index cost of acquisition. Why we are taking index cost of acquisition? Because transfer took place in 2020. Correct. So in this index cost of acquisition, what we'll do, 10 lakh divided by CII of 1011. CII of 2009-10 divided by 148 multiplied by 301. Divide by 148 into 301. 21.5. 2020-21. Yes. So this will be the capital gain amount. 10 divided by 148 into 301. What am I doing actually? 10 lakh divided by 148 into 301. So our cost of acquisition would be, what is the actual cost of acquisition? 15 lakh is the cost of acquisition. Now that was, I was wondering, 15 lakh was the cost of acquisition. Okay. So 15 lakh cost of acquisition divided by 148 into 301. This will be our cost of acquisition. 3050675. So our capital gain, long-term capital gain would be 449324. This would be exempt in the hands of A Limited. This was exempt in the hands of A Limited. On 1st April 2023, E converted such plot into stock in trade when fair market value of the plot was 60 lakh rupees. E Limited converted the capital asset into stock in trade. Capital asset has been converted into stock in trade. Sir, the day you convert capital asset to stock in trade, one thing happens. For E Limited, there will be capital gain applicable. But problem here is the exemption that was given to A Limited now will be withdrawn. The exemption will be withdrawn because this exemption was given to him on the condition that this capital asset shall continue to be capital asset for 8 years. But this exemption will be withdrawn, and this to 4,49,324 would be taxed in the hands of A Limited. In what year it will be taxed? Sir, it will be taxed in previous year 2021 only. This will be taxed in previous year 2021 only. So if subsidiary sold the assets to the parent and parent converted this into stock in trade, now subsidiary will be charged taxes in the year in which transfer took place. That's the first part of the answer. Second part of the answer, sir, E Limited converted this capital asset into stock in trade. So the date on which conversion is being done. What is the date on which conversion is being done? Sir, conversion took place on 1st Feb 2023. So previous year 2023, capital gain will be computed at that time only. Capital gain shall be computed at that time only. So full value of consideration shall be FMV 60 lakh rupees minus cost of acquisition. See, ideally, for E Limited, cost of acquisition shall be cost of acquisition of the previous owner. But since it is taxable transfer, I will teach you this today. But since it is taxable transfer, cost of acquisition shall be taken as the FMV on which tax has been paid. So 35 lakh. 35 lakh will be cost of acquisition, and since it is long-term capital asset, again long-term capital asset, this asset was acquired in 2020 and this has been held till 2023. This has been held for more than 2 years. Instead of cost of acquisition, we shall take index cost of acquisition divided by CII of year of acquisition 301. It was 301 multiplied by CII of year of transfer 331. So our cost of acquisition is 38,48,837. Capital gain would arise in our hands is. Now this is capital gain 2151,116. This is the capital gain that is arising in our hands in previous year 2023. But this will not be taxed in 2023. This will be taxed when you actually transfer this capital asset. Plot was sold by E Limited on 30th June 2025 for 65 lakh rupees. So when this plot was sold now, in previous year 25-26, 5 lakh would become our PGBP and this 21 lakh would be charged to taxes in previous year 25-26. We have not been asked the tax rates, but we have just been asked about the total income. And this is the tax implication. This is the total income in each people's hand. This is how question is being done. Now just imagine if somebody didn't even try this question, might not even have understood the example, might not even have understood if you have not tried this. Classic example of exemption being withdrawn and the conversion of capital into stock in trade. A classic example, beautiful example, beautiful. So we are done with capital gain. I have another question for you all. I was scrolling through and I found a question. I thought, why not to ask the students to solve this? Question number 2. Do you want to solve it? This is an example. This is a question from May 26 exam paper. We have done a heavier question than this. This is just an example. This is just a mere question, but we have done heavier questions than this. Can you help me out, sir? I can do it with you so that lesser of our time is gone. I can help you out. Mr. Pavan is a resident, purchased jewelry worth 560 during financial year 25-26. So Pavan purchased jewelry in financial year 5-6 for rupees 5,60,000 rupees. During financial year 11-12, he further purchased gold jewelry of 780. Acha, he purchased gold jewelry of both the years. All the jewelry was sold by him on 15th May 2025. 15th May 2025, he sold his jewelry. Jewelry that was purchased in financial year 20 was sold for 21 lakh, and that was also, see, entire jewelry was sold for 42 lakh. This is the best mistake that one can ever do. Says finding out that this jewelry was also sold for 21 lakh, this jewelry was also sold for 21 lakh, so total you sold for 42 lakh. Absolute blunder. Absolute blunder. Why ever you are going to club the sales consideration and cost of acquisition? Why in the God's name you are going to ever club that? You will never club that. Why ever you are going to club? Cost of acquisition is never clubbed. The full value of concession never clubbed. If you sell two properties, do you ever club them? Never. We always take them separately. So our full value of consideration in case of first case will be 21 lakh and cost of acquisition would be 5.6 lakh. In second case also it will be 21 lakh and cost of acquisition would be 7.8 lakh. In first case it will be long-term capital gain 15.4 lakh. In second case it will be 13.2 lakh. This will be the capital gain applicable. What the question is asking. He purchased a residential house of 29.5 lakh or 25.9 lakh on December. He owns only one residential house on May. Compute the capital gain chargeable tax as per considering the most beneficial treatment for the Pavan. Now he bought a house for 25.9 lakh. Now he has two options. Either the money would have been taken from this property or either money would have been taken from that property. The same example the Sanjay we did. We cannot club the consideration. We cannot club the capital gain. This will not be beneficial. Taking individual will always yield more benefit. Taking individual asset will always yield more benefit. Got it, sir? So now I bought house of 29.1 lakh. Now we have a choice. We can directly club them and calculate that will never be a good option. That is never a good idea. It's advisable to claim exemption on which asset has been purchased the most or in which a capital gain is most. Here capital gain is more, so I'm assuming that entire 21 lakh is used here. So we will be completely exempting this. Entire capital gain is used here. Sir, what about remaining? Reduce 21 lakh of consideration, 25 lakh 90,000 minus 21 lakh. We are left with 4.9 lakh of value. Now out of this 4.9 lakh has been used here. That means 13.2 divided by the net consideration of 21 lakh multiplied by 4.9 lakh of consideration here. This will exempt the remaining capital gain. 1320 divided by 21 lakh into 4 lakh 90,000. This will be 3 lakh 8,000. So our taxable capital gain will be 10 lakh 12,000. This will be our final taxable capital gain. Very simple question, but only if you can calm your nerves in the exam. If you try to do it in hurry, if you try to do it in speed, there are chances that there would be some or the other step you might do wrong. There are chances that you will do wrong. Otherwise, very simple question that can yield you good marks. Very simple question. Got it? Pavan. Done with capital gain chapter? Finally. Come on to next chapter, that is income from other sources. Meanwhile, just tell me how are you? How are you? Just a reference I'm giving to anybody. If somebody who has been coming and going might not be able to wake up, whatever it is. My recommendation to all of you would be ki just come to live class. Any day, any point of time, you can attend the class in between, you can leave the class in between, you will be able to understand. If you have already studied income tax, you will be able to understand everything. If you have not studied yesterday's class, if you have not studied any class till now, you will be able to understand everything. If you have not studied any class, even today, tomorrow also you will be able to understand. Even if tomorrow also you will not study, day after tomorrow you will be able to understand. So any day, any point of time, a student is welcomed. I don't have any issue with respect to that. So don't ask, sir, can we understand? You will be able to understand. Every time you will be able to understand on regular basis. Just come to class live. Even if you wake up late, even if you have to go to office early, try watching most of the content live, because that is what going to add more value. Recordings, I have seen people have been victim. They are not able to watch classes. Sooner or later, they are just they just want to complete the classes at the end, and at the end you just end up watching at 2x speed and no output is there. So I would recommend, instead of watching classes at 2x, it's advisable to just come to live. At least whatever time you can come to live, just come to live. Okay? Income from other sources. Can you all tell me what was the charging section in case of capital gain? Can you all tell me what was the charging section in case of capital gain? What will be the cost of acquisition of unlisted shares, price paid to acquire the asset? The price at which we have bought the call shares. So charging section for capital gain was section 45(1). It was 45(1). Similarly, so charging section for IFOS is section 56(1). Very important section, very important section. I'll come on to the section multiple number of times and you'll understand why I have been coming. Lawmaker says any income which is not taxed under salary, house property, capital gain, and PGBP. Any income which is not taxed under any of the head. Not taxed under any of the head. Plus it is not exempt, then only it shall come to IFOS. I'm just putting a star mark to it. Just that. You will forget this in future and I'll come back to you and I'll mention that I had already started this point. Any income which is not taxed elsewhere, plus such income is also not exempt, shall be taxable under that IFOS. Now, section 56(2) talks about certain things which will always be taxed under IFOS, or which will have IFOS at least in their topic. So first of all is dividend income. Dividend is always IFOS. Dividend is always IFOS. Okay. Wherever you earn dividend, anybody who earns dividend, sir, it will be IFOS. If you have shares as a stock in trade also, na, then to dividend will be IFOS. If you are a FII for whom capital assets are there, dividends are securities are capital assets, dividend will be IFOS for you. Dividend is IFOS for everybody. Everybody, sir, got it. Many more discussion in upcoming. Interest on securities. If you receive interest on securities, if you receive interest on bank deposits like savings deposits, like recurring deposits or fixed deposits, if you receive interest on loan given, you have given loan to somebody, or if you have received interest on IT refund, all these would be taxable under IFOS. Many more discussion coming. Winning from lottery, puzzle cards games, these are considered as casual income and this would be covered in tax rate chapter. For example, you have winnings from lottery. Winnings from lottery. Oh, winnings from lottery. Hmm. If you had one KBC, if you had one lottery, if you have seen, there is a Hindi movie called Mala Mal Weekly. If you have seen that, that is where winnings from lottery has come. That would be always taxed under IFOS. Winnings from online gaming discussed in tax rate chapter. Whatever the online gaming income that you have will be taxed under IFOS. Rent from letting out of plant and machinery, if not chargeable to PGBP, including subletting. If you have any income from plant and machinery, rental income from plant and machinery, see, rental income from house property would go to house property. If you have business of letting out, it would go to PGBP. But if you have other plant and machinery, it would be taxed under IFOS. Simply, it would be taxed under IFOS. Oh, amount received under Keyman insurance policy. See, this is something I want to discuss something. In this, I want to discuss something. If not taxable under PGBP and salary. Just give me a minute to illustrate what do I actually mean with this. For example, there is a company. There is a company called Reliance. Now, what is the biggest fear of Reliance as of now? What is the biggest fear of Reliance? You might say government might change. That is the biggest fear. That is the biggest fear that government might change. But right answer is no. That is not the biggest fear. The biggest fear of Reliance is Mukesh Ambani. What if something happened to Mukesh Ambani? What will happen if something happens to Mukesh Ambani? So, sir, Reliance is most worried about Mukesh Ambani. Most worried. So, every year, Reliance pays 50 crore rupees for life insurance of key person. This is called a Keyman insurance policy. There are certain people in the company which are really important, for which company pays certain sum of money as premium. This is not life insurance they are claiming. This is not a life insurance. Life insurance is a personal expenditure. It is just allowed. But this is something insurance on employees, insurance on key person. Insurance on employees is allowed. So this is something that company is claiming for their risk. It is a hedge against their future risk. So companies claiming this expenditure. Will this expenditure be allowed? Sir, this expenditure will be allowed. This expenditure would be allowed. Lawmaker says this expenditure is allowed. If anything happens to Mukesh Ambani, Reliance would receive 10,000 crore. Reliance would receive 10,000 crore and this 10,000 crore would be taxed under PGBP. This is Keyman insurance policy. Keyman insurance policy. Any insurance taken for Keyman of the company shall be allowed as expenditure and any income received on that account shall be absolutely taxable under that PGBP. Now, sir, why we are discussing under IFOS? Listen to the example, upcoming example. Mukesh Ambani is a key person for which insurance taken, expenditure allowed, income taxed. Expenditure allowed and income is taxed. Expenditure is allowed under PGBP and income is taxed also under PGBP. This has been the basic concept of Keyman insurance policy. Sir, but what happened? You know what? There is a company called Reliance. Again, company called Reliance. Now, it did not take any Keyman insurance policy for Mukesh Ambani. There is a Himalayan Baba, there is a Bengali Baba sitting in Himalayas with crossed leg doing meditation. There is a Bengali Baba in Himalayas who has been sitting. He has been meditating. He has a concept of telepathy and he gives every information to Reliance. What to buy, what not to buy, whether to go for Jio IPO or not, whether to give this business to Isha Ambani, whether to give this business to Akash Ambani or Anand Ambani. Everything is being decided by this Bengali Baba. But this is not an employee. This is not an employee. But Reliance took insurance for this Bengali Baba. Reliance took insurance of this Bengali Baba. Now, do you think that any human insurance policy premium would be allowed? Any premium would be allowed? Sir, if he is not our employee, premium will not be allowed. If he is not our employee, premium will not be allowed. Why would government allow any premium paid for a Bengali Baba who is not even related to your business? No premium would be allowed in this case. That is where Reliance caught the hand. Reliance said, Acha, that means premium will not be allowed. Premium will not be allowed. That means if something happened to Bengali Baba, any money received should also not be taxable. You are disallowing the premium, so money should also not be taxed. Money should also not be taxed. That is where lawmakers made a provision that if you receive any money received under Keyman insurance policy, which is not taxable under PGP, will be covered under IFOS. What my point is, this was not actually Bengali Baba, but the scheme and insurance policy was taken for Dhirubhai Ambani. This policy was taken for Dhirubhai Ambani. Because he was not an employee of the company, so premium was disallowed. Reliance was more happy to get the premium disallowed because anything happened to Dhirubhai Ambani, money received would be exempt. Company was more happy in disallowance because anything happened to Dhirubhai Ambani would render entire money exempt, but law was amended and made this taxable under IFOS. Got it? If Keyman insurance policy is bought for Mukesh Ambani, this will be allowed expenditure and taxable under PGBP. But if Keyman insurance policy is bought for Dhirubhai Ambani or some Bengali Baba, in that case, what will happen? Premium will be disallowed and money will be taxable under IFOS. This is how things are going to take place in Keyman insurance policy. We have with us interest received on late compensation or late compensation received on acquisition. See, if you have any immovable property which is compulsorily acquired, any immovable property which has been compulsorily acquired and you receive compensation on that, any immovable property compulsorily acquired and you receive compensation on that, what happens in that case? Sir, any compensation received will be and it will also give you interest as well. That interest is taxed under IFRS. We have studied this in capital gain and you get 50% standard deduction on that. We have studied on this. Similarly, any advance money forfeiture will be taxed under IFRS only after 1st April 2014. Any advance money, for example, you want to sell the property and you receive advance money and you forfeit them, it is taxed under IFRS. Before 1st April 2014, it was reduced from cost of acquisition. We have studied this. Any gift received. Remember, any gift shall be taxable under IFRS. Gift received shall be under IFRS. Details coming in upcoming chapter. Family pension. If your family receives any pension, what is this family pension? We shall discuss this later on. Much more discussion coming forward. Salary of MP, MLA. Do you remember a person coming to your house? Tummy so big, stomach so big that he might not be able to see his legs even. So big. Joint hands, wearing cap on the head, saying, Didi ji, please give us the vote. Your vote should be to us only. Your vote should be to us only. Every year, not every year, but every 5 years, somebody coming in white kurtas seeking vote from you. Asking, Didi, please give us vote. Bhaiya, your vote should be to us only. Every year this happens. Lawmaker says that once these people are elected, these MPs, MLAs, MLCs, these are once elected now. These are not doing any employment. These are not doing any employment. They receive salary. They receive money. Every month they receive money. They receive allowances. They receive multiple perquisites. They receive multiple things, but it is not their salary. Why? They are not employees. They are not employees. Even though you might call them employees, but these are doing seva. You understand seva? They are doing seva to general public. They are doing seva. They are not employed. They are doing seva to general public. Lawmaker says this is seva. So this will be taxable under IFOS. If they would be doing employment, then this would be taxable under salary. But they are not doing employment. They are doing seva to general public. Volunteering. This is just a service to mankind. Becoming a MP, MLA, MLC is a service to mankind. That is why it is taxable under IFOS, not taxable under any other head. Not even salary, not even PGBP. They are not professionals. Professionals, most of them don't know how to even sign. These are not even professionals. They just put thumb most oftenly. In addition to that, sir, they are not even employees of you. These are just volunteers. These are service to mankind. That is why their income, their salary is taxable under the head IFOS, not in any other head. Any daily and constituency allowance received is absolutely exempt. Any income received under section 68 to 1690. See, if you have undisclosed income, undisclosed assets, undisclosed investments, if this has been found by the department, you will be taxed under 115 BBE. We shall discuss this chapter. We shall discuss this when we will study miscellaneous provision. But point is, this will be taxed under IFOS. Any director's sitting fees. See, normally, if there is a director, now, director's money, direct money received by director is salary, so it will go to PGBP. Sorry, it will go to salary. If there is a director and he receives any salary, so it shall go to salary. If there is a part-time director, or sorry, if there is a independent director, he shall receive certain money from the board, so that would be his PGBP. Director's remuneration is normally PGBP, but there are certain directors who have very lesser income from the company, so they might offer it as their other sources as well. It might not be their business income. 20,000, 30,000 they are getting director's remuneration. In that case, it will be nothing but IFOS. If director's remuneration received, royalty received, in that case it can be IFOS, but it is only rare cases, not always, but there is a possibility that this might be classified as IFOS. You will not believe me. You will not believe me, but you will not believe me. Yesterday only I told you, Adish sir. Yesterday only, Adish sir's wife is planning to start it. Adish sir had opium farms and these were compulsorily acquired. I told you, you remember? If you remember, I told you that Adish sir had opium farms and those were compulsorily acquired. Since then, he has certain things. I mean, since he has multiple things going on in his brain. So Adish sir asked his wife, Mrs. Adish, to start preparing DT. There will be times when you might not see me behind this fast curtain because Adish sir's wife is going to start teaching DT. Adish sir's wife, sir, please don't overreact. Are please let me. Adish sir's wife will start teaching DT very soon. Very soon she will start teaching DT because she has been preparing well. She is more diligent and she is beautiful as well. Adish sir's wife will start teaching DT, so I have to leave. It was yesterday evening only I received a call from Sarthak sir. It was yesterday only. Sarthak sir is my employer as of now. He said, Rahul sir, how are you? I said, sir, absolutely fine. He said, what are you doing? I said, teaching. He said, don't worry. We want to relax you. You don't have to teach anything now. You know what? Yesterday I was crying. I received a phone call. And after that phone call, I was crying. I was just crying. That was the time I decided, why should I leave? Why should I leave? Why should I leave? Why should I leave? I don't want to leave. I asked Sarthak sir, I don't want to leave. He said, no, you have to leave. I said, no, sir, I don't want to leave. He said, take this 20 lakh rupees and leave immediately. And I left. I received 20 lakh and left. Now, my question to all of you is, Under which head of income this 20 lakh would be taxed? Under which head of income this 20 lakh would be taxed? Just answer to me. Under which head of income this would go? Sarthak sir gave me 20 lakh rupees to leave. To leave. Under which head of income this shall go? Sir, this shall go under the head, under the head, under the head. IFOS, PGBP, IFOS, PGBP. Sir, it will go under the head salary. It will go under that salary. Not in the course of employment. So IFOS, it will go under that salary. Lavanya said salary. It will go under that salary. Why it will go under that salary? Because I received money from employee-employer relationship. Not even in course of employment. It is not relevant you receive anything on course of employment. Not relevant. If anything has been received because of employee-employer relationship, not in course of employment. If you receive anything from employer, because he is your employer, he is paying you, now that shall always go to salary. This will be taxed under salary. So, sir, why we are studying this from IFOS? Because there is a contrary example to this. For example, I took such beautiful examples like, I mean, students were fan of me. I mean, students became fan of me. I mean, such beautiful examples I take. I was just teaching the class. I was teaching and there were people sitting. There were many students sitting here in the class. I was teaching so beautifully that students became fan of me. There was somebody laughing. There was somebody smiling at me. Oh, we have got the gem. We have got the gem. This was from Narayana Institute. You know Narayana Institute? In South India, we have a Narayana Institute famous for JE and for NEET. This institute is for JE and NEET. They want to start their CA coaching classes for which they were looking for DT faculty. They just found me. They just found me. He was so happy with my teaching style. He was so happy with my teaching style that he want me to immediately join Narayana Institute. I said, sir, I cannot join. I have commitment with Sarthak sir. I have to pay him 10 lakh rupees if I leave. I might have to pay him 10 lakh rupees if I leave. Narayana Wala Institute says, I am giving you 50 lakh rupees just to pay to Sarthak sir 10 lakh, keep 40 lakh and immediately join. Now here I received the money to leave the salary, but not from the employer. Are you understanding the contrast? In one case, I received money from the employer to get to leave the company. In that case, it will go to salary. But if third party pays me any sum to leave the company, to leave the employment, if third party pays this sum, in that case, it would be taxed under the head IFS. This is the major difference. Compensation on termination of employment only if taxable in IFOS if it is paid by a person other than employer. It will be taxed at IFOS only if it has been paid by the person other than employer. If it has been paid by person other than employer. Did you understand? Any income which is not taxable under any head shall be taxable under the IFOS. Now, sir, why is this color coding? There is a logic behind this color coding. Let me take that. Let me tell that. If you will carefully see, the blue ones are the ones which we have to study in depth, in detail, upcoming parts. The red ones are those which have already been covered in different chapters. The green ones are those which have already been, which do not have much depth. No more depth. Like human insurance policy, not I don't have anything extra to tell you. This is enough. This is only what we have. Salary of MPMLA, it will be IFS only. I don't have any more thing to tell you. Director's remuneration, compensation on termination of employment, I have nothing to tell to you. Any other income, I have nothing to tell to you beyond this. But these red ones will be covered in different chapters, and the blue ones we have to discuss. So blue ones, 1, 2, 3, 4, 5. Once we are done with these 5 incomes, we'll be done with the chapter. Let us start with the direct topic, which is dividend taxation. Okay. Let us start with the dividend taxation. Dividend taxation, let me build a base. Let me build a base as to how dividend taxation happens. Listen, very carefully listen. For example, we have with us, say, Gokul. Gokul has a P&L. Gokul Private Limited has a P&L. How this P&L has been going, understand. He has sales of whatever amount, he has purchase of whatever amount, he has net profit of 100 crore. He has a net profit of 100 crore. Fine. Government will tax this at the rate of 30% plus at the rate of 12% plus 4%. Motamati, I am saying 35 crore would be taken by government, so you will be left with 65 crore. You will be left with 65 crore. Fine. Fair enough. But fair enough. This 65 crore, where it would go? It would go to balance sheet. And this would go to reserves and surplus, 65 crore. This would go to 65 crore. This would go to balance sheet. Sir, fair enough. Now, if this money has to be taken out, what options do I have? What options do I have? If you want to take out the reserves balance, see, these reserves are in the form of cash or some of the assets. These are accumulated in the form of some assets only. If you have profit is either accumulated in the form of cash or some assets in some or the other way. Profit is being accumulated only. So profit is accumulated in that sense. Reserves and surplus of 65 crore rupees. If you want to take this out, you only have an option of dividend. So for example, Mr. Gokul took out entire reserves of 65 crore rupees. Now Gokul will be charged taxes at the rate of 30% on this. Motamati 30%, roughly 30%. Plus 15% surcharge plus 4% education cess, all in all. I'm just doing 65 crore into 30% into 1.15 into 1.04. All in all, 25 crore rupees of taxes he will be required to pay. All in all, he will be left with income of 40 crore. This is the income. This is the income through which he can. This is the income through which he can spend the money. This is free income. Now just imagine, don't you think it has been very unreasonable? Don't you think this is very unreasonable of government that you are earning 100 crore rupees? Once companies paying taxes, and this money, when it is being distributed to shareholders, again shareholders are paying taxes on this. Don't you think this is fairly unreasonable? Don't you think it is fairly unreasonable that earning 100 crore and using that 100 crore, you will have only 40 crore because 60 lakh is 60 lakh is gone in taxes? Don't you think it is unreasonable? You earn 100 crore, paid 35 crore taxes, but when you distribute those remaining 65 crore, again 25 crore will go in taxes. What 60 crore went into taxes? It is unreasonable. It is unreasonable, sir. You are correct. It is unreasonable. But is it something worth noting? No, sir. It is what happens. This is what happens. Whenever company earns anything, it pays taxes on that. That taxes, that post-tax profits become your profit and the reserves and surplus, and those reserves are distributed. When these are distributed, these are called dividend. So what the taxation of dividend happens? So dividend can be taken in the form, dividend can take place in the form of final dividend. If these reserves are distributed to the shareholders at the time of AGM, then it is called final dividend. It will be taxed in the year in which it is finally declared. Second thing, it can be interim dividend. Company might earn profits during the year, and during the year it declares the dividend. In that case, it will be taxable when these are received by the shareholders. So ultimately, what happens is whenever you want to withdraw this money, this money will be taxed in your hands. This will be taxable in your hands. Sir, a man, a person, a human of ordinary prudence would never be willing to pay taxes twice. Why you will be willing to pay taxes? Yeah, if you order entire burger and the McDonald's wala is just giving you 40%, will you ever pay the entire money? If you order a pizza with 8 slices and you get only 3 slices just because 5 slices have been taken away by the owner, will you pay for entire money? You will not pay, na. Logical thing is this only, that if you have paid for something, you get that thing. You earn 100 crore, then you should get 100. Take tax once but twice. Take tax once but twice. Issue was here. Now, what people found mistake was what people try to do is understand. As per Section 122 of Companies Act, dividend means any money distributed to the shareholders as dividend. Any money distributed to the shareholders is dividend. You know what? Any money distributed to the shareholders is dividend. Acha. Money distributed to the shareholders is dividend. Okay. Hmm. So what people pata? Now people had reserves and surplus of 65 crore. Instead of declaring money, instead of paying bank balance, what people gave up is people gave up land of 10 crore rupees. Just people gave up the land. Giving up land to the shareholders does not amount dividend as per Companies Act. As per Companies Act, distribution of land by the company or any asset, it can be shares, it can be any asset, to the shareholders does not amount to dividend as per Companies Act. People found out a way. People found out a way to save their taxes. So government said, nah, nah, nah. How come you can do that? No, 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 dear. No, 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 no. Any distribution of the assets by the company to its shareholder to the extent of accumulated profits shall be taxable, shall be considered as deemed dividend. It may not be dividend as per Companies Act, but for income tax purposes, any distribution of assets to the extent of shareholders shall be considered as deemed dividend. What did I say? Till the extent we have reserves and surplus, any distribution of this land shall be considered as deemed dividend. Market value of land shall be considered as deemed dividend. Wow, sir, wow. That means you cannot take out money in cash. Even if you give assets to the shareholders now, that too will be considered as deemed dividend. You know what Gokul did? You know what Gokul did? Gokul did something very logical. Something very, very, very superbly logical. Superbly logical. Sir, what is the superbly word? Nothing. Just an expression. What Gokul had balance sheet where he has reserves and surplus of 65 crore. He has share capital of 5 crore. He has bank balance of 40 crore. And he has other assets, including land of 25, 30 crore. He has balance sheet of this. Okay. He has this much of balance sheet. What he did, you know what? He announced a bonus. What bonus? Every shareholder will get free seven, so not seven, 6 debentures. Wow. Every shareholder will get 6 free of cost debentures. Master stroke. Master stroke. What Gokul did, see, ultimately his plan is to take out the money from the company. If he's taking out money in the form of bank or cash, it will be dividend. If he takes out any asset, it will be deemed dividend under Section 222A. What he planned is, he did not plan to take out any money. What he did is, he announced a bonus. That means every shareholder will have 6 debentures. That means there would be a liability in the hands of the company of 30 crore. Company would incur a liability free of cost. Without any reason, a liability has been created. Because bonus has been given to every shareholder in the form of debentures. Now, when time would come to pay off this liability, ultimately the bank balance would be used, na? Then this will be payment done. Now the payment would take place and money would come out of the business and logically saved from taxes. Saved from taxes. Master stroke. Very big master stroke. That if you distribute free of cost debentures to the shareholders, any money taken from the business shall be absolutely exempt. No tax would apply. No tax would apply. Lawmaker says, wait a second. Wait a second. Wait a second. Any distribution of debentures, deposit certificates, debenture stocks to shareholders or bonus shares to preference shareholders shall be considered as deemed dividend. If you are giving a free of cost debentures, Are Baba, it's nothing but you are taking out money in future. Today you are creating liabilities. A year later you will take out money in the form. Do you think that there is something written here? No, there is something not written. Not written. To the extent of accumulated profit, it shall be deemed dividend. So, does bonus imply deemed dividend? See, bonus is nothing. So, bonus you don't get anything. So, bonus free of cost giving bonus is nothing. It just increases your share capital and reduces the reserves. It actually does not change the share capital. Therefore, bonus is not deemed dividend. But giving free of cost debentures, giving free of cost deposit certificate will amount to deemed dividend. So, you cannot take out money. You cannot take out any asset. You cannot distribute free of cost loan. You cannot distribute these things. What you are left with, 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 what you can do, what you can do. Gokul was very much worried, sir. What do I do? What do I do? What do I do? How can I take money from the business? How can I take money from the business? How can I take the money? How can I take the money? Sir, you overreact a lot. Ignore my overacting. He has share capital of 5 crore. He has reserves and surplus of 65 crore. He has bank balance of 35 crore, sorry, 40 crore, and he has other assets of 30 crore. Gokul was worried, how do I take this money out? How do I take this money out and not pay tax? How do I bypass the provisions of dividend taxation? How do I bypass the provisions of dividend taxation? What Gokul did, you know what? What Gokul did, you know what? This is Gokul Private Limited. Gokul did liquidation of the company. Gokul liquidated the company. And you know what? There is a concept of liquidation. Concept of liquidation simply says that, for example, there is a shareholder holding shares in the company. And since shareholders' rights have been extinguished, therefore there is capital gain. So Gokul was very happy. Liquidation is the best way because this would entail him capital gain. How capital gain would be calculated in liquidation? Understand. Full value of consideration in the hands of the shareholders would be the amount of assets received. For example, amount of assets received is bank of 40 crore and other assets of 30 crore whose market value is say 70 crore. Assume, okay, this other assets market value is 70 crore. So how much assets received? 110 crore assets worth have been received. How much would be cost of acquisition? Cost of acquisition would be money invested. Money invested. 5 crore, whatever the share capital was, money invested. So 105 crore. Now Gokul is very happy to pay 12.5% taxes on that. Gokul is very happy. Very happy to pay taxes on this 1.5 crore. 105 crore. He is very happy to pay taxes. In this way, what has happened? He has been able to take out his reserves and surplus. Gokul wanted to take out this reserves and surplus, so he is able to take it out. Capital gain would be applicable in the hands of the shareholders and it would be just a tax at 12.5%. Nothing can be better than this for Gokul. Nothing can be better than this. But lawmaker says, wait a second. Any distribution to the extent of accumulated profits shall be deemed dividend. This 65 crore would be your deemed dividend. And the 65 crore would be reduced from your capital gain. Your capital gain would be just 40 crore only. So this thing that you had thought that you will pay taxes on entire amount at 12.5% will not help you. 65 would be taxed at slab only. 65 would be taxed at slab only. Oh my dear God. Oh my dear God. Did you understand the taxation of liquidation? What has happened? If you want to take out money from the company and you are planning to liquidate, you are planning to pay taxes on capital gain on the given whatever the assets have been received by the shareholders. You are planning to pay capital gain on that. Lawmaker says capital gain will be applicable. But first thing, the distribution to the extent of reserves and surplus will be first IFOS. This will be deemed a dividend first, and over and above distribution, over and above that distribution will be capital gain. So first of all, the reserves should be taxed at slab only, and then whatever distribution you are doing will be taxed at capital gain and at the rate of 12.5%. This is entire concept of liquidation. Let me read it out for you. Distribution of assets on liquidation to its shareholder to the extent of accumulated profits. If there is a distribution happening in case of liquidation, then first of all, entire distribution to the extent of accumulated profits shall be considered as deemed dividend. Shall be considered as deemed dividend. Let me take up liquidation for you all. We had kept this on hold. Company doing liquidation has nothing to do with, because in liquidation company has not required to pay any taxes, but in the hands of the shareholder how taxation would take place. So sales consideration shall be taken as it is. If FMV of the asset received, we shall take FMV. Asset money received it, we shall take that, minus we shall take the cost of acquisition. This will give you capital gain. This will give you capital gain, and you will be most happy to pay this capital gain. You will be most happy. Why you will be most happy? Because this capital gain is just 12.5%. Directly, indirectly, you have been able to take out reserves of the company, which might have been taxed at slab. You are able to just take it out at 12.5%. Such a beautiful manner of taking out money. But lawmaker says, wait a second, if you are bad, then I am your dad. If you are bad, then I am your dad. Shareholders' interest in accumulate profits. That means whatever your accumulate profits are now, first those profits shall be your deemed dividend. It has to be reduced from capital gain. Your capital gain will reduce and your IFOS deemed dividend would increase. Now, did you understand the liquidation? Dear beloved, did you understand the liquidation? Bro, did you understand liquidation and the deemed dividend under 222C? Sir, we understood. We understood. Certainly, we understood. It was easy. It was easy. There was nothing in this. Just imagine, I was required to teach you entire deemed dividend. Then only I might have been able to teach liquidation. If I didn't teach you this deemed dividend, how can I teach you liquidation? That is why I thought to teach it later on. Did you understand liquidation? Did you understand the deemed dividend? Yes, sir, we understood. Now Gokul is again worried. Understand the issue with the Gokul. He cannot take out money from the company. If he takes out money, it will be dividend, final dividend, or interim dividend. If he takes out any asset, it shall again be deemed a dividend. He is again stuck. If he takes out, if he gives any free of cost liability, if he distributes free debentures to the shareholders, it shall again be deemed dividend. If he liquidates companies so that capital gain is applicable, again it will be taxed. Again it will be taxed. There is no way he can take the money. Therefore, Gokul did something extraordinary. He did something extra. What did you know? Share capital was there, 5 crore. Reserves and surplus, 65 crore. Bank balance, 40 crore. Other assets, 30 crore. Market value, 70 crore. Balance sheet matching, balance sheet matching. Now the share capital was due. Understand? Huh? Share capital was due. How much? 50 lakh shares of 10 each. 50 lakh shares of 10 each. Now listen carefully. 50 lakh shares of 10 each implied 5 crore rupees of share capital. he tried to reduce the share capital. He tried to return this money 1 rupee to the shareholders. So now share capital would reduce to 4.5 crore. 50 lakh shares of 9 each, this would be share capital. And against this 50 lakh rupees, he wanted to give up 30 crore rupees of assets. 30 crore rupees of assets. In the name of reduction of share capital, you are paying 30 crore rupees. Is there something written here? Is there something written here? Gokul might argue. Gokul might argue. Gokul might argue, sir, how can you determine that what is the value of this 1 rupee? How can you determine? How can you determine? Are Baba, I am telling whatever, even if I'm not able to determine, can't we see that there is reserves happening? There are reserves in your balance sheet. If you distribute any assets, even at the time of reduction in share capital, it shall be deemed dividend first. It shall be deemed dividend first. Oh my God. Now he cannot even take out money he cannot even take out cash from the company. He cannot distribute assets to the shareholders. He cannot distribute free of cost liability. He cannot liquidate. He cannot reduce the share capital to take out the money. What can he do? Five ways closed. 5 ways closed. 5 ways closed. Why? Now how can he take out money? Gokul understood the pattern. Gokul understood the pattern. In all the cases, what was the issue? What was the issue? Gokul found out that reserves for 65 crore, therefore, if I distribute any money, reserves for 65 crore, therefore, if I distribute any money to the extent of accumulate profits, it were deemed dividend. Similarly, in the second case, if reserves were 65 crore, if I distribute any assets to the extent of accumulated profits, it shall be deemed dividend. If liquidation happened, then distribution to the extent of accumulated profits shall be deemed dividend. Oh. If reduction in share capital happened, then distribution to the extent of accumulated profit shall be deemed dividend. In any of the 4 cases, culprit was the 65 crore now. Culprit was 65 crore now. Actual culprit was this 65 crore. So what Gokul did, you know what? Gokul played a master stroke. I mean, master stroke better than demonetization. Master stroke better than any other plan. What Gokul did is, you know what? Share capital was 5 crore. Reserves and surplus was 65 crore. Bank balance was 40 crore. Other assets was 30 crore. What Gokul did, you know what? Gokul announced bonus. 13:1. How do we read this 13:1? 13 for every 1 held. Every shareholder who has shares will get 13 free shares. Now, what bonus does? Sir, whenever bonus is being announced, this reserves becomes 0 and the share capital becomes 70 crore rupees. Now, master stroke. This is the master stroke. The best thing that Gokul could do. In every provision, we had this thing that if you have accumulated balance, you take out cash, it will be deemed dividend. If you have accumulated balance, if you take out assets, it will be deemed dividend. If you have accumulated balance, if you take out if you give liability free of cost, it will be deemed dividend. If you have accumulated balance, you liquidate, then deemed dividend. If you have accumulated balance, if you do reduction share capital, it will be deemed dividend. Deemed dividend was dependent upon this reserves and surplus, and Gokul played master stroke. Gokul played master stroke. What the provision said, listen. Again, provision was like, if you are bad, then I am your dad. What the provision says, sir, if you have accumulated profits, whether capitalized or not, we don't care. If these reserves have been capitalized to share capital, we don't care. We will still call it deemed dividend. What does capitalization means? Issuing bonus. What does capitalization means? Transferring free reserves into capital reserves. Even if you have capitalized your reserves and surplus, now we would still consider them your deemed dividend. Oh my God. In all the sections we have capitalize or not, capitalize or not, capitalize or not, capitalize or not. He has 4 options. He had 4 options and all the 4 options gone. Now he cannot distribute assets. He cannot distribute free of cost debentures. He cannot liquidate. He cannot reduce. If he does any of the four things, it shall be deemed dividend. Even if he capitalizes the reserves now in all the four cases, it shall be deemed a dividend. What options Gokul have to take out the money? What options do Gokul have to take out the money? What options does he have? Feeling very sad for Gokul, really very sad for Gokul. Gokul, I am with you. I am with you. Don't worry. I am with you. Don't worry. I will also plan out things for you. I will also consider your thought process. You know what Gokul did? Gokul was a small company. He has share capital of say 1 crore. He has reserves and surplus of 5 crore. He has bank balance of 5 reserves and surplus of 4 crore, and he has bank balance of 5 crore. Gokul was a small company. He wanted to take money out. He wanted to take the money out. What money? I mean, how can he take out the money? What Gokul did, you know what? Gokul Private Limited converted itself to LLP. Can he convert that? Can he convert this LLP? Can he convert this into LLP? Sir, he can convert. A small company whose assets are up to 5 crore can convert. Now this reserves would be free. Any partners in LLP can take the money. Arey Baba, yesterday only we studied this thing. Now, any conversion of company into LLP, you cannot use this reserve for at least 3 years. You cannot use this reserves for 3 years. This reserves will be blocked. So this option is also gone. This option is also gone. This option is also gone. What Gokul can do now? What Gokul can do now? Another master stroke gone. Now, Gokul planned something else. Gokul had different intentions. Gokul had different intentions. Gokul thought, why do I need to take out the money? Why do I need to distribute money? I don't want to distribute. I don't want to distribute. Share capital is 5 crore. Reserves and surplus are 65 crore. Bank balance is 40 crore. Other assets are 30 crore. Why do I need to distribute these assets? Why? Why I need to distribute? I don't want to distribute. Instead of that, why can't I give loan to myself? Oh, loan to himself. Loan for 500 years at rate of 0.25 percentage. 0.25% per annum. For 500 years, he has taken loan. Government says, is there anything written here? Is there anything written here? Anything written here? Lawmaker says, no, no, no. What is this? It is nothing is written here. Lawmaker says, be very careful. If any unlisted company distributes any loans or advance, to whom loans or advance are given? Sir, loans and advances have been given to shareholders who hold more than 10% of the voting powers. It shall be considered as deemed dividend under 222E. If not to shareholders, if loans and advances have been given to a company or a partnership firm where such shareholder has 20% or more interest, then such loan and advance shall also be deemed dividend. If not, if loan and advance have been given to a manager or employee or any other person who will in turn divert this money to the shareholder, to all those three people, if advance has been given or loan has been given, it shall be deemed dividend. Got it? If loan or advance has been given by an unlisted company to shareholders holding 10% or more voting power, it shall be deemed dividend. Second thing, if not to a shareholder but to somebody where shareholder holds 20% interest, again it shall be deemed dividend. If not even to the company, if loan and advance have been given to somebody who might give this money to the shareholders, it shall again be deemed dividend. In all the three cases, it shall be deemed dividend. Gotcha. Here we don't have capitalize or not. Here, this is a way where you can save the taxes. For example, if you have share capital and reserves, if you capitalize reserves and then give loans, then it is not deemed dividend. This is the way, still a wrong area, a mistake area, which has not been corrected yet. But if you have, for example, if you have reserves, you can capitalize reserves and then distribute loan for 500 years. It is possible. It is possible to take out money in that sense. You can do that. Okay. Now, my questions to you, all of you. My questions to all of you, first of all, is, first of all, there is a company, Gokul Private Limited. Gokul gave loan to himself. Share reserves and surplus are, say, 65 crore. He gave loan of 10 crore rupees. Now, market rate is 8%. Gokul could easily get rate of Gokul could easily get intra loan at 8%, but he is paying 12% to company. Now, will this be deemed dividend? Will this be deemed dividend? If interest has been paid at market rate of interest or beyond market rate of interest, will this be deemed a dividend? A flat question to all of you. If interest has been paid beyond market rate or market rate, will this be deemed dividend? Will this be deemed dividend? Lawmaker says it is deemed dividend. It is deemed dividend. Even if money has interest has been paid beyond market rate of interest, it shall be deemed dividend. Another question, another concept. Sir, for example, rate of interest is fine. Rate of interest is fine. But Gokul took 10 crore rupees of loan on 1st June 2025 and repaid this loan on 2nd June 2025. He took loan for 1 day. Rate of interest is market only. Rate of interest is market rate of interest. Now, in this case, will this be considered as deemed dividend or not? Tell me. Will this be considered as market rate of interest? Will this be market rate of interest? Sorry, will this be deemed dividend? If loan is repaid in a day, that too at a rate of interest available in market, prevailing in market, we paid that rate of interest. Will that be deemed dividend? Sir, beautiful. Even if repaid, it shall be deemed dividend. Yes, even if it is repaid, it shall be deemed dividend. So, if loan is repaid with market rate of interest, it shall be treated as deemed dividend. Always it shall be deemed dividend only. Sir, whenever we compute accumulate profits, these reserves and surplus now are accounting profits. These are not assessed profits. Okay? Now, remember, whenever a loan is given to the shareholder, now, shareholder or a concern or somebody on behalf of shareholder, if loan is given to these people, now, it is always deemed dividend. Remember, if a loan is given, it is always deemed dividend. Loan given is always deemed dividend. Loan given is always deemed dividend. But advance given need not to be necessarily deemed dividend. Advance given might not be deemed dividend. Lawmaker says if you are giving advance in ordinary course of business, that means you give advance to everybody. I have a habit of giving advance work done so that I can get more discount. Therefore, I have given advance to shareholder. For example, shareholder is a lawyer and he is going to present us in ITAT. He is going to present us at High Court. Therefore, I have given him advance and I give advance to every lawyer. So if it is an ordinary course of business, not then deemed dividend is not applicable. Similarly, if advance is of commercial nature, what does advance of commercial nature imply? For example, if this is a kind of business where advance is necessarily to be paid. Without paying advances, services would not be. Everybody in the industry pays the advance. Therefore, it shall not be deemed dividend. Or, sir, if return to which service is to be provided by the shareholder. For example, we have paid him advance and he is yet to give me services. For example, rental advances. I have taken property on rent and I have paid advance rent to him. Advance rent is something against which we will be getting services. We will be getting rental services. Now we'll be getting rental property for us. So advance payment is possible in this case as well. Lawmaker says that return to which services should be given by the shareholders, it shall be considered as deemed dividend. It shall not be considered as deemed dividend. Entire point of discussion, sir, any distribution done, if asset is distributed to the shareholders in any of the section, it may be 222A, it may be C or D, in any of the three subsections or clauses, if asset is distributed, now fair market of value of asset shall be taken. Then capitalization means issuing bonus or transferring to capital reserves. This is what the point is. Amendment that came this year, which is very sensible. This amendment should have come very early. This amendment should have come very early. For example, there is a company called JP Morgan India. Now we have a company called JP Morgan USA. Now this JP Morgan India and JP Morgan USA are lagbag holding 60% shares in each other. 60% shares of JP Morgan India are held by JP Morgan USA. Now in this case, for example, this is also a banking company, or this is also a finance company, or this is also a finance company. And this JP Morgan is even listed at US Stock Exchange. Assume it is listed on US Stock Exchange. US Stock Exchange, it has been listed. Now, JP Morgan India might give loan to the parent company. It is possible. These are finance companies. It is easier for them to transfer loan. It is easier for them to give the loans. See, assume it is JP Morgan, but it is possible that there might be many different finance companies possible in the market. One finance company giving loan to the other finance company. It is possible. It is possible. It is practically possible that one finance company might give loan to other financing companies and they might be parent subsidiary. In that case, should a finance company giving any loan to other finance company, should this be deemed dividend? Yeah, you might give loan to your parents, it is possible. You might give loan to your parents, it is possible, and you are a finance company. So should this be deemed dividend? Lawmaker says no. If advance or loan is between two group entities, one of them is finance entity and the parent entity is located in stock exchange outside India, then in that case, any loan advance shall not be considered as deemed dividend. Any loan advance between them is not considered as deemed dividend. At last, sir, any payment for buyback, any payment done on account of buyback by the companies shall be considered as deemed dividend. Any rupee paid by the company, if that company does the buyback, now that shall be considered as deemed dividend in the hands of the shareholders. We shall discuss this when we'll study assessment of various entities, not right now. This is the entire dividend taxation for you all summarized. Did you understand these provisions? Did you understand this dividend taxation? Did you understand dividend taxation? Yes, sir. We got it. We got it. Moving further to taxation of interest. Taxation of interest. What does taxation of interest imply? Understand. There are certain exempt interest, there are certain taxable interest. What are exempt interest? Understand. For example, if you receive interest on public provident fund, it is exempt. If you receive post office savings interest, it is also exempt. But remember, it is exempt up to 3,500 rupees. If you have a joint account, then up to 7,000 rupees interest is exempt. Interest on gold deposit bonds. If you remember definition of capital asset, if you remember capital assets, a ULIP is a capital asset. Securities by AIFs or FIIs is the capital assets. Any asset is a capital asset, out of which there were 4 exclusions. If you remember, a stock in trade is to be removed, a movable plus personal asset is to be removed, plus a rural agricultural land was removed, plus gold deposit certificates and gold monetization bonds were removed. If you remember, interest on these gold deposit bonds were exempt. Interest on gold deposit bonds were exempt. I am not talking about sovereign gold bonds. Sovereign gold bonds interest is taxable. I am talking about interest on gold deposit bonds. Interest on gold deposit bonds, it will be absolutely exempt. Okay? Fine, fine. Sir, absolutely fine. In addition to that, you may write one more thing. Another interest is exempt. Interest. Actually, this we will cover in NR taxation, but it is better to recall with IFRS only, because once you study NR taxation, topics are already very heavy. So covering bigger things in smaller chapters is always beneficial. Interest received by non-resident on his NRE account is exempt. If any non-resident receives any interest on his NRE account, it is absolutely exempt. So these four interests are exempt interest. Interest on PPF, post office savings account up to 3,500 or joint account 7,500. Interest on gold deposit bonds, and at last interest on NRE account received by a non-resident is absolutely exempt. Now, what are taxable interests? See, normally you have to see you are receiving interest on securities or loans. Normally, interest received on securities on loans is to be checked first, that whether securities are held as a stock in trade or whether loan giving is your business. If these are your business, if these are your stock in trade, then definitely interest would go to PGBP. Interest would go to PGBP, else it would go to IFRS. Else it would go to IFRS. So you have to check if you are into loan giving business now, then it is PGBP. Interest will be your PGBP. Else it would be IFRS. Similarly, if securities are held as stock in trade, then interest would be PGBP. Else it would be IFRS. If you receive any interest on FD, RD, savings account, normally it is taxed under IFRS. And if you receive any interest on IT refund, it is always taxed under the head IFRS. Always taxed under the head IFRS. Basic provision is this only. Lawmaker says that interest on loan, securities, FD/RD is taxable on accrual basis, whereas IT refund plus interest on enhanced compensation or compensation is taxable on receipt basis. Normally, FD/RD, savings, these interests are taxable on accrual basis, whereas interest on IT refund plus interest on compensation is taxed on accrual on receipt basis. This is to be understood. At last, sir, if you have created a fixed deposit which is necessary for the conduct of the business, then interest would go to PGBP. What does that mean? For example, if I want to take an electricity deposit, if I want to take an electricity connection, and for that matter, I have to deposit certain sum to electricity board, I might receive interest on that deposit. Lawmaker says in that case, interest would be taxed in under the PGBP. So if FD or security deposit is necessary for the conduct of the business now, then in that case, interest on that shall be considered PGBP. Absolutely PGBP, no questions attached. Sometimes question might also say that the interest is received on surplus fund. Surplus fund will also be IFRS, will always be IFRS. But if interest has been received out of the funds used in business, then it will go to PGBP. So if it is related to business, it would go to PGBP. Necessary for the conduct of the business, it will go to PGBP. Else it will go to IFRS. Okay? Taxation of interest. How do we tax it? Interest on loan. If you do not have business, then PGBP. If business, then PGBP. Else it will be IFRS. If you talk about securities, if you have securities as stock in trade, then PGBP. Else it would go to IFRS. If you have savings, FD, RD, security deposit, normally it is IFRS, but if it is necessary for the business, then PGBP. At last, IT refund, sir, in that case, it is taxable under that IFRS. First three are taxable on accrual basis, and fourth is taxable on receipt basis. Okay? This is how things go in case of taxation of interest. Taxation of renting of plant and machinery. Renting of plant and machinery, how it is being done. See, if you have house property which is being rent out, then it was taxable under house property head only. If you have renting of plant and machinery in ordinary course of business, then it will go to PGBP. If not, then then the rent on plant and machinery shall be taxable under IFRS. Whatever gross rent has been received, take that. Reduce the deductions if you had paid any repairs expense on that machinery, if there is any depreciation on that machinery, if there are any other charges that you have paid. For example, you have paid brokerage, you have paid insurance charges, you had paid repair charges, you had paid depreciation. What I mean, you had incurred depreciation. Every expense which is directly attributable to earn that rent will be reduced from the income. Remember, rent from land shall also be taxable under IFRS only. Remember, this will come when I'll be teaching PGBP. Rent from land will be taxable under IFRS. Only house property is taxable under house property head. All other rents are taxable under IFRS only. All other rents. If it is rent from land, if it is rent from plant and machinery, it is always taxed under IFRS. Remember, okay? And any expenditure incurred to earn that rent is absolutely allowed as expenditure. So this is rent from plant and machinery. Rent from plant and machinery. Okay. With love and affection, we did first three incomes. We are only left with gift taxation and family pension. We shall take a small break and we shall continue further. It is 8:19. I am giving you break till 8:35. Take break and come forward. We shall study the gift taxation, and it's the beautiful section you will study. Beautiful section. Welcome back from break. Guys, are you back from break? Guys, guys, are you back from break? Sir, we are absolutely back from break. Guys, are you awake? Sir, we are awake. We are for sure awake. Before going to break, we understood the dividend taxation, interest taxation, and rental income. We had a question from Lavanya. She said that what if the renting of house property is the business? See, renting of residential house property or house property is the business now. You have to find out if you have been giving up residential house property as renting now, and it is your business to give up the residential house property on rents, then it will go to house property head only. But if you give up the commercial house properties now, then we shall be taxing it under PGBP. I will discuss this when we will study PGBP. Okay? I will discuss this when we will study PGBP. Don't worry. This is a topic worth understanding, but when we will study PGBP, then only. Let me complete family pension first because this is a small topic. See, if there is an assessee, listen carefully, listen. If there is an assessee who receives a salary, this salary will be taxable under salary head. We all are aware, there is no question about it. If you receive any salary, it will be taxed under salary head only. No ifs and buts. But there are many government employees who used to get the pension. After retirement, they used to get the pension till death. This pension was also taxable under salary head. Also salary. After death, there are instances where government employees used to get debt as a pension, family pension. Why? Because their family might require their support now. See, if there were some employees who were employed in government services before 2000, then even after their death, their family were given some family pension for some years. There is a friend of mine whose father was income tax officer. His grandfather was income tax officer. Grandfather died and it has been 5 years and they are still receiving some pension of 28,000 rupees. Family pension is of 28,000. So in this case, now after death, whatever the money has been received now by the family members, it is called family pension, and this will be taxed under IFOS. So during the life, during the service, salary received is salary, pension is also salary, but post death, whatever the money that has been received by the family members is family pension. It is taxed and it is taxed under IFOS. 1/3 of the family pension is allowed as deduction. Lawmaker says whatever family pension you receive, 1/3 or 15,000 per annum has to be allowed as deduction. If you opt for 115 BAC or if you pay taxes under 115 BAC, then 25,000 per annum will be allowed as deduction, whichever is lower. Anybody receiving family pension who is the recipient of Paramveer Chakra or Veer Chakra, in that case it is absolutely exempt. Family receiving family pension of Paramveer Chakra, Veer Chakra, absolutely exempt. Any family pension received by the widow, children of any armed forces, paramilitary forces is also exempt. So if somebody died during their duty and family members receive any family pension, it will absolutely be exempt. Okay? So family pension is a simple topic. No worry about this. Our fifth topic is also done. We are only left with last topic, that is gift taxation, and that is too much in depth. We have a lot of things in depth. Sir, whenever we study gift taxation, we need to understand gift taxation is always from the viewpoint of the recipient. Everybody active? Everybody active? If you are active now, promise me that gift taxation you will study from a recipient's viewpoint. Nobody is ever going to study this gift taxation from the sender's point of view. It is always recipient. Assume you are getting the gift. Modi ji giving away a house free of cost to you. I am giving a gold chain to you. I am giving iPhone to you. I am getting something. I mean, you are getting something. Just imagine that you are receiving anything. Bill Gates adopting you as a child and giving you his entire property. You are being given an island. I mean, just imagine that you are receiving everything. Just understand from recipient's point of view. Okay. A promise that gift taxation will only be studied from recipient point of view. Understand. The moment you start studying from sender's point of view, you will do wrong. Okay. Now, whenever you receive any gift, now some gifts are taxable and other are exempt. Wow. Some gifts are taxable, the other are exempt. Wow. There is no gray area. Some will be exempt and the other will be taxable. What are exempt? First of all, you need to understand. Any gift received from a relative is absolutely exempt. Any gift received from a relative is absolutely exempt. Relative is absolutely exempt. Okay. Who is relative? We shall discuss later on. So I am receiving any gift from my relatives. Okay? I am receiving gifts from my relatives is absolutely exempt. Second thing, if I receive any gift on my marriage, okay? If I receive any gift on my marriage, for example, my sister is getting married and I got a gold chain. Will that be exempt? Sir, provision says no. Person who is getting married should receive the gifts. Person who is getting married should receive the gifts. If I am getting married, I should receive the gift, not my parents. If my father gets a gold ring in my wedding, will that be exempt in his hands? No. Sir, but we have never paid taxes. We have seen father getting gifts, mother getting gifts, sister getting gifts, but they are never being taxed. They have been treated differently. Understand? It is like gift given to me and I have given this to my father. Okay? But father receiving gift directly is absolutely taxable. If it is proven that father has received that gift directly, it is absolutely exempt. It's like I have received the entire jewelry and I am now giving away to my relatives. That is how things go. Okay, otherwise, if father directly receives any gift on my marriage, it will be absolutely taxable. Any gift received on account of will or inheritance. For example, Mukesh Ambani one day said, "Chih, very poor children of mine. Anant, Isha, Akash are very poor, very bad, very bad. I want to give entire property of Reliance to Rahul. Entire property of Reliance to Rahul. Mukesh Ambani wanted to gift me. Lawmaker says, Arey, this is exempt in my hands. Any estate received on account of will, any estate received on account of inheritance will be absolutely exempt. Wow. Any gift received due to death or the death of the donor. For example, if I have a house and I said that after I die, this house should be given to somebody. If because of death you are receiving anything, it is similar to inheritance only. Any gift received on account of death of the donor. Okay. Gift received from local authority, the biggest thing. The clean roads that you get, the water that you drink, the air that is there around you, which is superbly clean. Those gifts are nothing but the gifts from local authority. It is not taxed, it is exempt. It is not taxed. The traffic maintenance, the traffic lights, the quality of traffic management, the quality of waste management, these are the things you get from local authority. There is no tax to this. These are absolutely exempt. Absolutely exempt. Okay. We have any gift received from institution, any trust, any hospital, any institution, trust, hospital. These will be absolutely exempt if these trusts are registered. So if I am, for example, ill and there is a trust who pays for my treatment, I received some money. Lawmaker says if that trust is registered, any money received from that trust is absolutely exempt. Got it? If I am ill and trust pays certain monies for my treatment, it is absolutely exempt. In addition to that, if I give any money to trust, on that money 56 to 10 will not apply. If I have my property and I sell that property to trust at a very lower price, on this provision, on this also 56 to 10 shall also not apply. So if registered trust gives anything or receives anything, 56 to 10 shall not apply to those transactions. Trust, hospital, charitable trust, institution, whatever it is, 56 to 10 shall not apply to these transactions. From individual by the trust for the benefit of the relative of the individual. What does that mean? For example, Rahul has created a trust for benefit of my daughter. I want to get my daughter married in future, so for that I have created a trust. I donate every day to trust and for the benefit of my daughter. Lawmaker says any money received by this trust is absolutely exempt. This is not a registered trust which we are talking about. This is not 12BB registered trust. This is a normal trust. So if this trust has been created for benefit of my relative, then lawmaker says it is exempt. But sir, if this trust has been created for benefit of others, for others' benefit, if this trust has been created for the benefit of others, in that case, what will happen? It shall be taxed. Yeah. So these following gifts shall be absolutely exempt. shall be absolutely exempt. Gift from relative is exempt. Gift from gift on account of marriage is exempt. Gift from will, inheritance, or death is exempt. Gift from local authority is exempt. Gift from charitable trust is also exempt. Or gift to charitable trust is also exempt. At last, sir, if any trust has been created for benefit of relatives, then any gift received by such trust is also exempt. These are exempt gifts. We shall understand. First, you have to check whether gifts are exempt or not. First, gifts are exempt or not. Sir, got that. Got it, sir, got it. Okay, sir, got it. Sir, who is a relative? Let me take you through. Who is a relative? Under 56 student, who is relative? We understood now any gift received from relative is absolutely exempt. Carefully listen. If you have notebooks with you, try drawing this thing. Try writing this thing, whatever I'll be writing now. Na, you shall try writing this thing. For example, if you are an individual, for example, this individual has a spouse. So spouse is always your relative. If you are a boy, then your wife will be a relative. If you are a girl, then your husband will be relative. So spouse is always relative. Their lineal descendant, their lineal descendant will always be relatives. Lineal descendant will always be relatives. Lineal descendant, maybe children, their spouses, grandchildren, their spouses, daughter, son, their respective spouses, everybody. For an individual, their brother and their sister are also spouses, plus their brothers' spouses and sisters' spouses. Bhaiya and his wife, sister and his husband. Spouse's brother and spouse's sister and their respective spouses. So, spouse's brother and their wife, spouse's sister and their husband. That is how things go. For an individual, his mother and father will also be relative, and spouse's mother father will also be relative. Spouse's mother father will also be relative. For an individual, mother's brother and their spouse, mother's sister and their spouse, father's brother and their spouse, his father's sister and their spouse will be also relative. I don't know what do we call. If you have a father's sister, we call it buaji. We call it buaji in Hindi. What do we call in South India? Can you tell me? If I have a father and father has a sister, then father's sister, what relation do I have? We call it buaji in Hindi. What do you call in South India? Can you tell me? This is like mother's brother and spouse, mother's sister and spouse, father's brother and spouse, father's sister and spouse. Okay? What do you call the lady who is your father's sister in South India? In Malayalam or maybe in Telugu or maybe in Kannada? I don't know which language. I mean, whatever language you use. Father's sister. What she called? What she's called? Attha. Lokesh says Attha. Okay. Okay. Bhuvana says Attha. And what about your mother's sister? I am writing it down so that I do not forget it. I will use this once. Your mother's sister, what she is called? Along with that, now your lineal ascendant. That means your grandfather, grandmother, grandmother's grandfather, grandmother's father, mother's mother. Similarly, father's father and father's mother. Similarly, spouses, lineal ascendant. These shall be called lineal ascendant. Amma. Hey? Your mother's sister is called Amma. I'm just writing it down. Penny. Oh. I'm writing out Penny. Okay? So Atha is father's sister and Penny is mother's sister. Okay? I'm writing it down. Okay? I'm just writing it down. Sir, got it. Atha and Penny. I got it. Okay? Did you understand the relatives? Who is a relative? See, this definition is really important. I am not joking around, but this definition is really, really important. If you don't understand this definition, then believe me, you will do wrong. You will do wrong. So for an individual, his spouse, his lineal descendant, his brother, sister, and spouses, spouses, brother, sister, and spouses, mother, father, spouses, mother, father, your brother, sister of your mother, father, and spouses, your lineal ascendant. These are relatives for you. See, this is, can you see a creature in this image? Can you see a creature in this image? Can you see a creature in this image? If you can carefully see, it might look like a mouse to you. It might look a mouse. Sometimes I draw, it might look like a spider as well. People have been calling it a spider as well. People have been calling it a mosquito as well. But if you carefully see, it would look like a mouse. A mouse. Okay? So can I call it a mouse? Can we correlate to this thing that whenever 56-10 is being referred, whenever 56-10 is being referred, you have to remember this mouse so that you are able to recall the relatives. If you are able to recall the relatives. You know what? The same thing I had asked the team to draw. Okay. I had asked team to draw the same thing and they drew this mouse. This looks really cute, but this is of no use. Okay. I drew this mouse, gave this to team while getting the book typed. I wrote it as well, think it like a mouse. I drew this mouse, but team drew this mouse, yeah. I mean, this looks really cute, but this is of no use. This is of literally no use. But still, this looks really cute. So I have never let that change. This looks cute. That is why I never changed that. But it is absolutely of no use. Okay. Now, now a mouse is to be, whenever I call a mouse, you have to remember 56-10 relatives. Whenever I call for a mouse, now you have to remember 56-10 relatives. Who is a 56-10 relative for an individual? His spouse are relatives. His lineal descendants are relatives. His brothers, sisters are relatives and their respective spouses. Spouses, brothers, and sisters are related and their respective spouses. Mother, father, spouses, mother, father. Brother, sister, and of the mother, father, even mother's brother, sister, and even father's brother, sister. And lineal ascendant of your end and lineal ascendant of your spouse end. Can you draw this? Can you draw this? It is 8:55. I am giving you 4 minutes time. Draw this relative mouse and share on Telegram group. If you are already a part of Telegram group, send it to group. If you are not a part of group, send it to me personally. But do send this mouse without even looking at the mouse. Without looking at the mouse, do send it to me on Telegram. Sir, we have to send these things to you. Yes, you have to send this to me. I do not let go you. I do not let you go. Okay? If you are caught in my hands, you will be caught. I'm waiting on Telegram for you to respond. I have phone in my hand. I have been waiting. I am waiting for you. Okay, 2 minutes are remaining. You have to share this mouse and share this mouse to me. I want to see whether you do it correctly or not. The more you write with your hand, the more retention you will have. Believe me. I'm not being harsh, but the more you write, and I'll force you to write multiple number of times. There will be instances where I'll ask you to write things. There will be instances where I'll force you to draw things, and there will be instances where I'll force you to type things. Elder sister is called Amma or Pedamma. Younger sister is called Penny and Chinamma. Mother's elder sister and mother's younger sister are different. Oh, I didn't know that. Mother's elder sister is Pedamma and Amma, and younger sister is Penny or Chinamma. Okay, very nice, yeah. I mean, this is the beauty of the language. Just imagine in English, everybody is called aunt. Your father's sister, your mother's sister, your father's brother's wife, your m- mother's brother's wife. Everybody is aunt. Everybody is aunt. Wow. I received a message from Positive Minds. Now, who is Positive Minds? I don't know. But this doesn't look like a mouse, to be honest. Individual, spouse, brother, sister, spouse, mother, father, lineal ascendant. Very nice, very nice. Who is this Positive Mind? Kindly tell me. Okay, Kavya, 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 got it. I received from Kavya and Kavya wrote it beautifully. Kavya has sent it beautifully. What about other people? Lokesh, if you are a part of group, then kindly share me on the group because other messages would be missing. Okay, I can check this thing as well. Okay. Very nicely presented DPQ, by the way, Lokesh. Lokesh has been writing DPQ. Very nicely presented. Very nice. Now, this looks like a mouse. It looks more of a, I mean, it's a mouse. I'm looking at it now. It looks like an alien, to be specific. What how Lokesh has sent me now. No offense to your drawing. It looks like an alien. You know the old the inverted droplet he has drawn, but beautiful. But Lokesh has done a mistake. Lokesh, brother, sister of your spouse's mother, father are not relative. What did I say? You, your spouse's mother, father are your relative, but their brothers and sisters are not relative. You have to change it. That is the mistake I was looking for, and you did that. Correct it. Correct it as soon as possible. Received message from Krish. I'm calling it you are Krishna because I could not pronounce your name. Once I'll talk to you just to know what the pronunciation is. Very nice, Krish. Very nice. Beautifully drawn. Gokul. Gokul's mouse is somewhere robotic mouse. It looks like more of a diamond. With your innovation, I am able to make things more differently. I mean, I can think of more things. But Gokul, one thing is wrong. Your mother, father's brother, sister are also your relatives. Brother of your mother, brother of your father, sister of your mother, sister of your father, and the respective spouses are also relatives that have not been incorporated in your image. Kindly add them as well. Lavanya, mistake. Your spouse's mother, father is your relatives, but your spouse's mother, father's brother, sister are not your relatives. Correct that. Lokesh has corrected it, sent it to me. Bhuvana, very nice. Bhuvana has drawn the most beautiful mouse. Most beautiful mouse. I mean, clearly resonating to what we have done. Very nice, Gokul. Very, very, very nice. Added. Kavi has also drew a good mouse, a very healthy eating mouse, a mouse which eats away the entire things of a house. Kavi has drawn beautifully. Okay, perfect, perfect, perfect. Chalo, let us ask a few questions about relatives. Let me see how many of you are able to recollect or how many of you understood the point. For example, see, I personally have been of belief that your father's side relative are not good. I mean, my atta is not good at all, but my Pitni is very nice. My Masi, I mean, we call it Masi. Mother sister is very good. Every time she comes up now, she brings us things for us. She gives us the money when she leaves. But when our father sister comes, na, she never brings us anything. Nor she gives us any money as well when she leaves. It's not today. Today, though, she might not even give to me. But even when we were kids, na, then too, she never gave money to us. So our Atha has never been good to us. I don't know why father's relatives have never been good, at least to me. But mother's relative has been very nice. Okay. Now, considering that thing, I gave a gold chain to my Atha worth 1 lakh. Tell the taxability of gift. Taxability of gift under section 56 to 10. Before answering, just type and don't send. Type and don't send. Atha gave one gold chain to me worth 1 lakh. Why Atha will give us gold chain? No. हाँ ठीक है. Why Atha gave us the gold chain? Whereas Pinny gave us a house of 50 lakh. Whereas I gave a house to Pinny worth 50 lakh. All these are gifts. Just tell me what will be taxable. Will that be tax exempt? Tax exempt. Don't tell the amount. Just tell me whether it will be taxed or exempt or tax or exempt. Just write 4 words: T E T E E T E T T T T T E E E. Whatever you think, just write them down and tell me. Just write down these. Just write down whether this would be taxed or exempt. Which of these gifts would be taxed or exempt in the hands of the recipients? These blood relations I have been able to understand only with these batches only. There is a concept of marumakal. I was not aware. Marumakal is a concept like son-in-law, I guess, is called marumakal. I was able to understand only with some students when some students told me Annadanam, Marumakal, and this Amma, Pedamma, Penny. These I have only been able to understand with the batches. Gokul said T-E-E-T, T-E-E-T. Krish says teat. Okay. What about other people? Lokesh says itte. Itte. Okay. What about other people? Should I answer, sir? You answer. Instead of me trying guessing, instead you should answer. Why to work hard? Kavya says teat. Okay. Now how to think? I gave gold chain to Atha. 1 lakh rupees. Gold chain. Now listen. Where does Atha stands? Atha is an individual. For her, just think of like this, that his brother's son is giving a gift. His brother's son is giving a gift. Brother's son is giving a gift. Do you think that this should be taxed? Do you think that this should be taxed? Brother's son gift should be taxed. So I don't think that brother's son giving gift should be taxed because he is not relative. So this should be taxed, and therefore T would be there. It is taxed. Atha gave me a gold chain. Of course, for us, our Atha is relative. Our father's sister is our relative, so gift received is absolutely taxable, sorry, exempt. Penny gave us a house. Our mother's sister is relative. She would be giving us, so it will be exempt. For us, for recipient, it will be exempt. And I gave a house to Penny. In this case, sir, Penny is an individual who is receiving gift from her sister's son, which is not a relative. Therefore, it will be taxable. So your answer would be teat. Whoever said ete is wrong. Now, what my point of telling is, sir, it is possible that for you somebody might be relative, but for him you might not be relative. For you, Atha is your relative. Any gift received from Atha is exempt in your hands. But you giving the same gift to Atha might not be exempt. Oh. You receiving any gift might be exempt, but you giving any gift might not be exempt in their hands. It is not a linear, it is not a both side relationship. It's just a single one sided relationship. One sided relation. It might be one sided. Okay? With your father, mother, it is bi-sided. But with your Atha, with your Penny, with your father's brother, with your mother's brother, these are always two sided. These are always one sided relationships, not two sided. Understood, sir. Now, I remember your Swati NS. Swati NS, I think she is already a student of us. She is not new. She is already a student. I'm missing out your name. Swati NSK. I'm missing actually, but I believe she is already a student. She is already a past student. See, this is what you also have to do. Once you pass out now, you have to come to the lectures. You just have to comment down the beautiful words. You have to comment down the answers, okay, for your with your positive notes. Last marathon she attended. Okay. Last batch marathon she has attended. Okay. I remember this name Swati Nayak. I remember NSK, Swati NSK. Okay. Now, this is all about exempt transfers. Acha, now you have joined the power patch also. Okay, perfect. Perfect. Now, these are the exempt gifts. Listen. Understood the exempt gifts? Relative, marriage, gift from inheritance, will, this is absolutely exempt. Absolutely exempt. Okay? Now, listen carefully. Apart from these exempt gifts, whatever gifts received has to be studied later on. Now, I want to tell you a real life instance. A real life instance. To be honest, it is a real life instance. I'm not lying to you. But every year we teach multiple students, many students every year. And this Jan 26 now, Jan 26 also, we had multiple students in Hindi batch as well and English batch as well. We had multiple students. And should I call it fortune, or should I call it luck, or should I call it hard work? But students do really connect with us. I mean, it's just fifth day. You might have started to connect with me a bit. I have also started to connect with you a bit. The more we move forward, the connection will go stronger. Like I have already started to know Lavanya, even though her name is appearing Krishna, but by Krishna, looking at Krishna, I can recall Lavanya only. For example, we have Bhuvana, Kavya, and we had Satyanarayan Boyna. It is Lokesh. By just looking at your names, I can relate to everything. I can relate to your actual names. This is the bond that is being inculcated over the period, and this bond will strengthen over the batch. Once we are done with the batch, now there will be an absolute bond between the batch. You will have every understanding as to how do I think, and this happens every batch. This happens in every batch. Every attempt we teach these batches, and every attempt this happens. Now, I'm telling you personal experience. Last year in May 26, in May 26, we had nearly lot of exemptions. Believe me, there were 200 exemptions in DT, 200 exemptions in DT. And people are actually now, how do I tell? People are actually very supportive. I mean, the support that students provide now is support nobody else is provide. Like once they clear, they share to other students as well. You have no, you are just appearing now. You will be appearing in the exam. You might not share it now, but once you are convinced, you will share to other students as well. This is what they do. But there were some special students. Why I am saying special students? There was a girl. Her name was Vaishali. What happened was she cleared in May 26 attempt. A result came. It was, I guess, it was 17th, 18th June. It was, I don't remember, 17, 18 June. It was. She cleared. She was very happy. She very, very happy. I mean, everybody is happy after results. Who is sad? She was very happy. And out of her happiness, she won to 18 June. Yes, 18 June. Out of her happiness, she wanted to feed me with some sweets because happiness knows new bound now. No, knows no bound now. I am happy. I want to feed you something. You are happy. You want to give some sweets to me as a sign of happiness. So she wanted to feed me. But I stay in Indore. She was from Jaipur. She could not come. She was even married. She wanted to feed me with sweets. What she did, you know what? Immediately, she sent 800 rupees to me on my phone pay. I was very angry. How can I take money from students? But she said, "Sir, sorry, but please don't return." I am so happy about you, so happy with your performance that I am giving you 800 rupees just to buy the quality of sweets that you like. Whatever sweets you like, now uh, you just buy and feed it. You feed your family, feed it yourself with that sweets, and assume that I have given you. I will be really happy. I will be obliged if you eat that sweets. I mean, how obliged the students can be. I'm not saying you do that. I'm not saying you do that, but students have been doing this, so you can take it as a hint. But I'm not saying I'm not soliciting anything. I never solicit anything. I never solicit anything. But this is how students support. Students show their love. She was not alone. She was not alone. On the same day, nearly 200 students who secured exemption by studying DT from us sent rupees to me, sent money to my phone pay. Just imagine on the same day, I received 1,60,000 rupees just for sweets. Students sent me 1,60,000 rupees just for sweets. No other reason, just sweets. Now, people like me very, who I am, how much sweets I can eat, maximum 1 kg. The most expensive sweets would be 2,000, 3,000 rupees kg, maximum 4,000 rupees kg. Even it has golden work on it, then only it will be 4,000 rupees kg, not more than that. What do I do of this money? What do I do of this money? I'm not saying you give me sweets. I'm not saying. I'm not even sharing my mobile number 9630357599 to you that to send sweets to me. I'm not saying. I'm not even sharing my address to you. I'm not soliciting anything. I'm just saying that students have been doing this. Fees is altogether different. Fees is altogether different. You always give fees to study. If you have not enrolled, do enroll. But if you have not enrolled, do enroll. That is a different matter. But this is something, a gesture that actually shows love. There was a lady who was smiling from the corner. Can you call the name? Can you name the lady? She said, Acha, 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 you have been receiving money. Oh, ho, 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 ho. You have been receiving money. Ah, money. She said, any money received during the year exceeding 50,000 rupees, individually or aggregate, is taxable under IFRS. If you receive any money, if you receive any money during the year, individually or aggregate, if that money exceeds 50,000 rupees, then it shall be taxed under IFRS. Sir, what you started? Where did you reach? No relation. And just to teach the single point, you gave us hook of that long. That is how I do. Some examples I have in my mind. I want to push them to you so that at least you are able to sit for 4 hours now. Otherwise, you will never be able to sit for 4 hours. Okay? I will take these type of examples continuously. Now, I'm not saying you send me any sweets, but yes, this is how students have been showing. So really 200 students score exemption. Numbers are imaginary. So does examples. Now, this was one example. You know what? Have you ever heard of a chappan dukan in Indore? There is a chappan dukan. Chappan dukan. Sir, all the stories for the aggregate taxability. Yes, yes, aggregate taxability. Now, there is a chappan dukan in Indore. Chappan dukan na is a organized street food market. In Indore, we have organized street food market. I mean, very tasty food. If somebody comes to Indore, not just visit that chappan dukan, just message me out. I'll of course come to meet you. But if you come to Indore, do visit that chappan dukan. We faculty at Fastna normally go to chappan dukan just to have a cup of tea. Normally, we faculty at Fastna, every faculty, Sarthak sir, Adish sir, me and Amit sir, whoever are there. Riddhi madam is from Ahmedabad and she's from Kolhapur as of now. So she never comes, but otherwise every faculty goes to Chappan Dukan just to have a cup of tea. Their tea is very good. There is a shop of tea. It tastes really good. One day, me, Sarthak sir, Adish sir, Amit sir, all have gone to Chappan Dukan just to have a cup of tea. And there was a student who was passing. There was a student who was passing. He looked at me, just passing, and he looked at me. I thought there would be anybody. Somebody might be just looking at anybody. It is normal. I thought he must have recognized Sarthak sir. That is why he must be looking at him. That is possible now. Again he trespassed and again he looked at me. Again third time he trespassed. He looked at me. Again that he trespassed. 4 times he looked at me. And later on fifth time he came back and he said, "You are you." I thought that he must be referring to Adish sir. So I said, "Adish sir." Was it no, Rahul sir? You are Rahul sir. You are Rahul sir now. I said, "Yes." What? Can I help you? I asked him, "Can I help you?" He said, "Rahul sir, I'm very happy. I saw your marathons, I saw your Gula series, I saw your question answer videos, and I was your power batch students. And because of you, I secured exemption in DT, and I have cleared CA final, and I have got job in Deloitte, and I have package of 15 lakh rupees right now. I am very happy. My life is settled, and my DT is settled because of you. I am really happy about you. I'm really happy for you." He had a gold ring in his hand. He just took it off and gave in my hand and says, "Sir, Rahul sir, please don't return. This is a gold ring I'm giving you as a souvenir of happiness. Just take this gold ring with you. Do not return it." He took out his entire gold ring, 10 grams gold ring, gave it to me, and did not even ask for return. Even though I didn't want to return it, but I had to at least insist, "Ari, no, I cannot take, Ari, I cannot take, Ari, I cannot take, Ari, I cannot take." I insisted. He objected, and I took the gold ring. I'm not saying do that. I'm not saying do that. Okay? But just selling students have been doing here. Again, again, Nimotai was smiling from the corner. She said, "Any movable property received during the year and the value of movable property exceeds 50,000 rupees. Fair market value of that movable property is 50,000 rupees. Then it shall be taxed in your hands under IFRS. Entire property shall be taxed. Entire movable property shall be taxed." Sir, what about if movable property is received? If movable property is received at an inadequate consideration. If movable property is received at inadequate consideration. For example, I have received a gold ring, whose market value is, say, 1.5 lakh, and I bought that gold ring for just 60,000 rupees. Can I say 90,000 is the benefit given to me? Can I say 90,000 is the benefit given to me? Right answer is yes, it is a benefit given to me. Lawmakers say that this 90,000 would be taxable under the head IFOS. Did you understand this provision? Did you understand this provision? Are Baba, did you understand this provision? If you receive any movable property at inadequate consideration, then if benefit given to you is more than 50,000 rupees, then it will be taxed in your hands. Sir, what is a movable property? That is important. If I receive a car free of cost, will that be taxed? If I receive a bike, if I received a wristwatch, will that be taxed? Lawmaker says no. Lawmakers say no. Listen very carefully. If you receive these assets, any kind of shares, securities, drawing, painting, sculpture, archaeological collection, any other form of art, bullion, virtual digital asset, and jewelry, only these 10 assets are considered as movable property. No other assets are called movable property. If you receive car, if you receive car free of cost, sir, it is not a movable property. If you received a bike, a wristwatch, a movie ticket, concert ticket, a for example, a travel ticket, these are not properties. These are not properties. These are not considered as properties. You will not be taxed on this. Only these 10 things are to be taxed. What are these 10 things? Shares, securities, drawing, painting, sculptures. 5 things. Shares, securities, drawings, painting, sculptures. Archaeological collection, any other form of art, virtual digital asset, bullion, and jewelry. 10 things. Shares, securities, drawings, painting, sculpture, archaeological collection, any other form of art, bullion, virtual digital asset, and jewelry. 10 things. Shares, securities, drawings, paintings, sculptures, archaeological collection, any other form of art, virtual digital asset, bullion, and jewelry. These are 10 things that will only be taxed. Share, securities, drawings, painting, sculpture, archaeological collection, any other form of art, virtual digital asset, and bullion. These are the 10 things that are going to be taxed. Type them in comment box. I am waiting for 2 minutes. Type them in the comment box and I will be waiting for you for 2 minutes. I'm waiting for you for 2 minutes. Type it down. It is 9:24. I am waiting for you till 9:26. Type it down. Type it down. Shares, securities, drawing, painting, sculpture, archaeological collection, any other form of art, virtual digital asset, bullion, and jewelry. 10 things you have to type it down and send it to me in comment box. Not in Telegram group, not anywhere else, but in comment box. Comment box that you are using on YouTube. You have to send it to me. You have to send it to me. Bhuvana Road, share, securities, drawing, painting, sculptures, archaeological collection, bullion, virtual digital asset, any other form of art and jewelry. Very nice, Bhuvana. Bhuvana Road. Swati Road, share, securities, drawings, share, securities, jewelry, drawing, painting, sculpture, archaeological collection, any other form of art, bullion, virtual digital asset. Very nice. Krish Road, share, securities, drawings, paintings. Very nice, Krish. Kavi, very nice. Krishna, Lavanya, very nice. Gokul, very nice. Very beautiful, beautiful. Lokesh, very nice, very nice. So these are 10 assets. Okay. Kavya, very nice. Very nice. I hope you understood that only these 10 assets are going to be taxed in your hands. If you receive any other thing, then it will not be taxed. For example, if I receive Thailand trip, it will not be taxed. Okay? Similarly, for immovable property, lawmakers say if I receive immovable property free of cost, then if SDV exceeds 50,000 rupees, then entire SDV would be taxed in my hands. If SDV, sorry, if I receive that immobile property for inadequate consideration, then you have to check if SDV minus consideration, that means benefit given to us is more than 50,000 plus SDV is more than 110% of consideration. If both the conditions are fulfilled, then difference will be taxed. Difference will be taxed. What did I say? Sir, SDV, if exceeds 50,000 rupees, then entire SDV is taxed in my hands. If asset is received at inadequate consideration, lawmaker says, then if difference is more than 50,000 plus SDV exceeds 110% of consideration, then only it is taxed. For example, sir, can you give an example? For example, if I have bought an asset for a land SDV is 60,000, sorry, 60 lakh. I bought this land for 50 lakh. If you check difference benefit I have got of the benefit is 10 lakh rupees. Plus, in addition to that benefit, I have got SDV exceeds 110% of consideration. In that case, sir, the difference will be taxed in my hands. Whereas if I change the data, if I check consideration is 55 lakh, in this case, benefit is 5 lakh, but SDV is not exceeding 110% of consideration now. SDV does not exceed. In this case, 5 lakh will not be taxed in my hands. Okay? So benefit has to be more than 50,000 plus SDV should exceed 110% of consideration, then only benefit will be taxed in my hands. Okay? Let me take an example. I have not taught this provision. Let me take an example to illustrate. For example, listen, it's just an example. Rahul received following gifts. Received following gifts from following people. I received cash from Kavya, rupees 20,000. Cash from Lokesh, 25,000. Shares from Gokul, 27,000. Jewelry from Lavanya, 21,000. Painting from Krish, 10,000 value. Immovable property from Swati, 35,000. Immovable property from Kavi, 31,000. Calculate the total amount chargeable under 56 to 10. Total amount chargeable under 56 to 10. Calculate the amount that will be charged under 56 to 10. I'm giving you 2 to 3 minutes to try this. 2 to 3 minutes to try it out. Kavi says 1,30,000. Lavanya says 1,03,000. Kavi corrected her answer, changed her answer to 1,03,000. Krish, 1,03,000. Lokesh, 1,03,000. How come 1,03,000? Sir, there is an inherent provision. Any cash received up to 50,000 is exempt. It's exempt. Up to 50,000 you can receive cash. If cash received more than 50,000, then only it is taxed. Up to 50,000 is allowed. Is cash up to 50,000? Yes, sir, it is up to 50,000. Second thing, any movable property received up to 50,000 is exempt. More than 50,000, it will be taxed. Do we have movable property more than 50,000? 27,000 plus 21,000 plus 10,000. 58,000. Will this be taxed? Sir, it will be taxed. Sir, immovable property, sir, up to 50,000 is exempt. More than 50,000, will it be taxed? See, immovable property goes differently. Immovable property has to be always checked on per property basis. If you buy three properties of 30, if you get 30,000 rupees, three properties, you may never club them. For immovable property, you never aggregate the properties benefit that you have got throughout the year. Every property has to be looked individually. In this case, if property per property benefit is up to 50,000, it will never be taxed. We never aggregate for immovable property. We never aggregate for immovable property. So this will not be taxed. There is an inherent provision that money received is up to 1,000. Movable property might be up to 50,000, but combined together, combining them, if it exceeds more than 50,000, then it will be taxed. Combining them, if it is more than 50,000, then it will be taxed. So how much will be taxed? So these five things clubbed together, 20,000 plus 25,000 plus 27,000 plus 21,000 plus 10,000. All in all, 1,03,000 will be taxed. And that is what you have got. That is what you have got correct. Beautiful answer. Beautiful answer. Beautiful. Understood, sir. ठीक है? Some important provisions. Some important provisions. Listen up. What did I tell you till now entirely? First thing I told you, cash receipt up to 50,000 is exempt. Movable property benefit or FMV up to 50,000 is exempt. Immovable property benefit or FM SDV is up to 50,000 is exempt. If cash exceeds 50,000, it will be taxed. Movable property exceeds 50,000, it will be taxed. Immovable property, it will be taxed. Cash plus movable property combined also we have to check 50,000 limit, but immovable property is to be checked on per property basis. This is first thing I told you. Second thing, whenever you consider movable property, you shall always be taking shares, securities, drawing, painting, sculpture, archaeological collection, any other form of art, virtual digital asset, and bullion. These are the only movable properties which are going to be taxed. No other movable property is going to be taxed. Okay? Third thing, very important, very important, sir. Gift taxation will only attract in your hands if you receive them as capital assets. If you receive any asset as capital asset, then only gift provisions would apply. What do I mean? Sir, for example, if I'm a jeweler, and there is a gold chain whose market value is 1.5 lakh. But somehow, as a jeweler, I am able to buy that thing for 90,000 rupees. I got a benefit of 60,000. Should this be taxed in my hands? Arey Baba, buying jewelry at a cheaper price, it is my stock in trade, so it is my duty to buy things at a lower price. Or I am a real estate builder, real estate developer. I might get a land whose market value is say 1 crore rupees. I might get it for 50 lakh. I might get a benefit of 50 lakh rupees. For a real estate developer, property can be received at a lower price. So, gift taxation is only going to apply if such properties are received as capital asset. For somebody receiving stock in trade now will never get 56 to 10 attracted in their hands. 56 to 10 is only applicable when property received is capital asset and not stock in trade. Got it? Got it, sir? Yes, sir. I want to take an example to ask a question. Okay. This is Rahul. I mean, I am Rahul. This is what this is Rahul. I am Rahul. I was getting to my married. I am getting to my uh, beloved, Mrs. Rahul. I was getting married. I was getting married. The dream wedding I was having, the beautiful flowers, the beautiful DJs, the beautiful decorations, the beautiful music was there. Every relative who has been good to us is there. Every relative has been bad to us has a sellotape on their face. The perfect wedding that I could ever have. I was having that wedding. Entire faculty from entire team from Fast came. Sarthak sir came to the wedding. Sarthak sir is my employer. As of now, he's my employer. He came to my wedding. He was dancing like oi hoi 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 hoi. He was dancing like you might have never seen him dance. Nagin dance. He was doing Nagin dance. He was doing Nagin dance. I mean, you could never find his that view. You might have never seen him. His looks, his way. I mean, you would never see him doing that thing. Nagin dance in my wedding. In Nagin dance, he came close to me. He came to close me. He congratulated me, Rahul sir. Congratulations on your wedding. And he took a chain from his pocket, tied to my neck, and went away. And since then, I have never seen him. Sir, what has happened to you? Everybody ties gold chain to your neck. Everybody gives you gold ring. Everybody gives you money. Everybody gives everything to you. My examples very fit to me. I am getting married. Sarthak sir gave me a gold chain. Sir, that gold chain is worth 1.5 lakh rupees. I received that gold chain in my marriage from Sarthak sir worth 1 lakh rupees. 1.5 lakh rupees. Will this be taxed or exempted? And if yes, why? Sarthak sir gave me gold chain on my wedding. On my wedding. Will this be taxed or exempted? Waiting for your response. Waiting. Lavanya says on the side of exempt. Lavanya is on the side of the exempt. Gokul says it is exempt. Bhuvana says it is exempt. Nobody thinks it's taxable. Nobody. Somebody say na taxable. Somebody so that I can. Somebody say taxable. Lavanya says exempt. Gokul says exempt. Bhuvana says exempt. What about other people? Kavya says also exempt. Kavi says exempt. And for nobody's surprise, and for everybody's surprise, it will be tags in your hands. Hey, sir, how? Why? Sir, right now you told sir, marriage is an exempt. I mean, marriage is. And what if marriage is an exempt gift now? Whatever you receive on account of marriage is exempt. Right now, you only told us. You remember what I told you 5 minutes ago? Don't you remember what I told you at least an hour ago? Don't you remember one thing? Any income which is not taxable under other heads shall come to IFOS. Gift received from employer will go to salary head. Even on account of marriage, he has given me gold chain because he is my employer. If not employer, he is my business associate. Whatever reason he is giving me, sir, it would go to that respective head. And if that respective head is not considered, then IFOS will be considered. No. So exemption would arise only if it is a part of IFOS. If some of my relatives gave me gold chain, then it is gift from relatives. It might come under IFOS and it will be exempt. But here's employer is giving me a gold chain, and employer giving me gold chain will go under salary. And if anything goes under salary, it may never come to IFOS. It may never be exempt. I had already put a star mark to this point, and I knew that everybody would be wrong in this point. Okay? I already knew this star mark was for this only. I know that you would do wrong in this. That is why I had put a star mark. And that is why the entire line has been given to you. Gift received on account of employer-employee relationship shall be taxable under that salary, even at the time of marriage as well. If Sarthak sir were not my employer, he might never gift me that gold chain. Na. He is giving me gold chain because he thinks I am a talented employee that is going to benefit him. That is why he has given a gift. If he were not an employee, he would never give me a gold chain. Therefore, this is a gift received on employee-employee relationship, even on account of marriage. It shall be taxed under salary, and since it will go to tax, it will go to salary. It would never come to IFOS, and since it would never come to IFOS, there is no point of exempting. There is no point of taxing. Got it? Now, what another point? For example, I am a businessman. Okay, I sell goods of various companies, including Hindustan Unilever, Marico, Dabur. I sell goods from various companies. And on account of business relations, Hindustan Unilever gave me a Thailand trip. Thailand trip. Thailand trip for 6 days, 7 nights. 6 days and 7 nights Thailand trip I have got. Wow, sir. Wow, wow, wow. Worth 90,000 rupees, including hotel, stay, travel, everything has been sponsored by Hindustan Lever. Provision says that is this gift taxable or exempt? Now I think you would give me correct answer. Will this gift be taxable or exempt? Will this gift be taxable or exempt? Now everybody gave the right answer. Why, sir? Why this gift is exempt? Sorry, why this gift will be taxable? Why? Sir, you only told now. Sir, if you receive any movable property, so this movable property should be share securities drawing only. So it is not a movable property. It should be exempt now. Hare Baba, I also told you that thing, na, ki first you have to check it if it falls under other heads. If it fall under other heads, so we have to tax it there. Any risk gift received on account of business relation will go to PGBP, so it will be taxed under PGBP. It will not be exempted. Same thing has been written in English. Any gift perquisite arising from business profession, it will always be PGBP. ठीक है. So this is entire IFOS gift taxation for you all. Not actually done. There are certain instances where 56 student is not applicable. You might skip. You might skip this point as well. See, for example, there was a time when Yes Bank was in a serious threat. Yes Bank. Yes Bank was under serious threat when Rana Kapoor had done some fraud, and that point of time the Yes Bank share price was 400. It fell to rupees 13. 13 rupees it fell. Nearly 97% fall in the share price. It happened in this case. Now, to revive this Yes Bank, now Government of India asked SBI to buy Yes Bank, to buy a significant stake in Yes Bank and to run this. Now, point involved is Yes Bank, whose shares were trading at 13 rupees, SBI did not agree to buy at 13 rupees. SBI forced government to buy these shares at 10 rupees. So SBI got a benefit of 3 rupees per share for 3,000 crore shares. So 9,000 crore is the benefit that SBI got. 9,000 crore is the benefit that SBI got. Is this benefit taxable under 56 to 10? Lawmaker says no. If shares of Yes Bank have been received by investors under reconstruction scheme, no gift provisions have been applicable. For example, if there is central government, if central government is disinvesting any PSU, like LIC, like Hindustan Aeronautics, government is disinvesting from these PSUs. So these shares might be available at a very big discount. These shares might be available at a discounted price. Market value may be very high, but you might buy these shares at a very lower price. Lawmaker says that if you buy them at a lower price, no gift provision shall apply. If there is a company whose board of director, whose subsidiaries board or subsidiary board have been suspended by central government, in that case, now you might buy shares of these companies at a lower price than their market value. No gift provisions are going to apply in this case. This is entire gift taxation for you all. I have to discuss a topic which is gift in case of immovable property, which is nearly going to take 50 minutes. I personally think I cannot spare that much time today because there is time limitation as to how long we can proceed. So I'm ending things on this note. That's all from my side today. I have certain pointers to tell you worth noting. Okay? Focus, everybody listen. Okay? Class is over for the day, but some important pointers from tomorrow. Up to day number 1 to 5 are on YouTube and these shall remain on YouTube. These classes you might get on Fast app later on, but whenever you have, whenever you want to refer these classes, you have to refer these classes on YouTube only. Continuously, these will be available on YouTube. You want to read it, you want to listen it once, twice, thrice, 4 times, 5 times, 10 times, 100 times, you want to share it. You want to listen my examples again and again, you can listen it any number of times. Sir, we are so free that we listen your examples. But I'm telling now, I'm telling, if you want to teach in DT in future, then you might have to learn these examples. You might have to copy these examples. Fortunately, I never copied any of somebody's example. These are my examples only, but just telling, if 1 to 5 lectures are on YouTube, these shall continue to be on YouTube. From lecture number 6, we shall have on Fast app, for which link has been already shared to you on Telegram, on your mail ID. If not received, immediately message out to the team. They will share the link of the access or the access of the app to you immediately. They will share to you immediately. Okay? 6th, 7th, 8th, 9th. These 4 lectures are going to be about PGBP. And later part, we shall move forward with other chapters, but make sure even you miss out even a day you miss out now, you continue the next day. You may not miss the live classes. This has been my experience that the moment you start missing out on live lectures, now the moment you start missing out the lectures, that moment you start missing out the subject as a whole. Have faith. Going live is the simplest thing that you can do. Only thing it requires is waking up in the morning and sitting. I have seen students watching at 2x speed, yet somehow they are taking 6 hours to complete a lecture, which a lecture can be done in just 4 hours. Students take 6 to 8 hours to complete one lecture by watching at 2x speed, because they want to again rewind, they again want to listen. So instead of that, come on live basis. Okay? Board notes plus Super 150 will be shared on Telegram group. Telegram group has been sent to you on email. If you did not receive that email, you must have received. I have shared Telegram group. People are already joined. People have already joined that group. You should join this Telegram group because that is the only way through which I can communicate to you directly. To those students who are batch specific, I can communicate to them directly on this Telegram group only. So do join. Whatever content that I write, whatever specific content, batch specific content I give now, that I will be giving in group only. And that exam paper that I have said now, I will be sharing in group only. Okay, once we are done with the batch, I'll share the test paper that will be in group only. Okay, fair enough. Apart from this thing, if you have any doubt, consistently ask. We are done with capital gain. We are done with IFOS. Almost we are done with IFOS. I am giving you a DPQ today. You have to solve this DPQ today. Question number 15, Mr. Manju Menon, you have to solve as DPQ. Day 5, DPQ number 3. Question number 15 of Super 150. Manju Menon. We have solved question number 1 in class. We have solved second part, or also we have solved DPQ second in class as well. So we have solved every DPQ that we have given as homework. So it's not just that we are giving up the, we are just, I am just giving the homework. I am also solving those questions in class as well. Okay. So we are doing consistently good question answers, good coverage of question answers. We are doing, that's enough. If you have somebody who want to enroll for the batch, can enroll any day, any time before assessment. Before assessment procedure begins, anybody can join the live batch. Once I start assessment, I might not take live enrollments. Why I am saying that? Because after assessment, now there are a lot of interlinked topics and I might not be able to entertain those who are hearing me for the first time. There is certain set of things that you should already know about the batch that will be taught multiple number of times till the time we start assessment. But once we start assessment procedure, or once we start IT authorities, now I might not be in that space to entertain the new live students. So if you have somebody who wants to join the class, or if somebody who is planning to go for the classes, join as soon as possible. The early it is better, the early it is advisable, because some investment can give you more output than you expect. Okay, that's all from my side today. Do solve DPQ. Do read the chapter capital gain. Do solve question answers of capital gain on your own at least once, so that you are comfortable about the entire concepts. Apart from that, see you guys tomorrow with same energy, excitement, and enthusiasm. Bye bye. Take care. Have a great day.